Hi everyone, I hope it is audible. First of all, welcome to the stream. I just want a confirmation regarding whether the screen is visible as well as whether you are able to hear me. Okay, that's great. So now what we are going to do is I have already taken a trade. So since the market has become so volatile and it's pretty hard to trade because the market is moving everywhere. It's pretty violent on the upside and pretty violent on the downside. So that's why we thought of having a very simple as well as a new system, which I'm going to explain. So right now I have already taken the entry, but now I'm going to explain what is the stop loss, what system are we using, and how we plan to continue with this, right? So as you can see here, I have just taken a simple 17,200 short straddle. One thing about this is I have gone very less quantity. So I have just gone 1250 and we will trade normally today. So I will first explain you what is the system and I will also explain you how exactly you can use this. And in case if let's say any stop loss or something gets triggered, we will also monitor it. And later on, if adjustment is required, we'll also end up adjusting. So I hope all of you are excited, and if so, then first hit the like button and also share the stream with your friends. So we'll quickly get started with that. So now the time is 9:51, and I will start by 10, where I will first explain what exactly or what system are we using. Because as I already told, for whomever is joining new, since the market has become pretty volatile, this time we are using a different system. So if the video is blurred, so because we are streaming the video in full HD, in case if you feel the video is blurred, then all you have to do is just click on the top right setting button. So you can change the video to 1080p streaming because the video is being streamed at a full HD quality. So just a couple of more minutes to go, and meanwhile, you guys can tell me how your trading day is going. So it has just now started. The market looks absolutely flat. Neither Bank Nifty or Nifty has made any significant move. So everything is pretty flat right now. So hopefully it continues the same way because that only then we will be getting a edge. So now the time is around 9:52. So I'll just quickly connect my charger, set up things, and by 10 o'clock, I'll just explain what exactly are we doing. Yeah, guys. So welcome back again. So now, let me just start by telling you what the system is. Before, if you remember, we were going one entry at 10 o'clock, 1 o'clock, and 2 o'clock in Bank Nifty. But now the major issue with trading in Bank Nifty is, as I told you earlier, it is very volatile. So every now and then your stop loss is going to get triggered, and you're going to have a hard time trading in Bank Nifty. So today, we will be more or less using the entire capital. I will just tell you how to size your position, what are the key things that you have to keep in mind while trading. So this entire system I'll just be putting live and showing it to you how exactly it works, right? So let me just open PowerPoint. So I will just write on the PowerPoint and I will explain the entire thing to you. So I hope it is audible as well as you're able to hear. Is there any disturbance with regards to voice? Okay, let me just maybe reduce my fan speed and give it a try. Okay, cool. So let me just now quickly tell you what exactly we are doing. So the most important thing here, so whenever you are trading, always keep in mind two things. One, you have to always have a risk definition. That means how much are you going to, how much are you willing to lose today? So that is something you have to definitely keep in mind. And apart from that, one more thing what you have to keep in mind is you should make sure that your psychology doesn't get affected while trading. So when does your psychology get affected? So only when your position sizing is not right. Let's say instead of going 100 quantity, you end up going 500 quantity. That time your M2M swings are going to be huge. So let's say 1 point of M2M can easily move around 1000 points, 1500 points. So this time, if the quantity size is more than what you can handle, your psychology won't be in the right state. So that's when again you end up doing or taking bad decisions which will put you in loss. So we are going to discuss both the aspects now, what exactly we are doing and how do we plan to adjust or take this trade forward, right? So now I'll just tell you the simple system. So this system we are using in Nifty, right? So you can also note it down what exactly we are doing. So this system we are using in Nifty, right? So all you have to do is there are 3 entries again. So I will tell you what is the benefit of multiple entries as well. So we are taking 3 entries. So one at 9:30, one at 11:30 and 1:30. So totally 3 entries, 9:30 a.m., 11:30 a.m. and 1:30 p.m. Right? So now, since we have 3 entries, the system is very simple. So the thing is, you can build any sort of a system and all the systems work. So there's nothing called as this is the more superior system over the other. All the systems work. It is just about which is easier to execute and which you are more comfortable doing. So what we have done is create a short straddle at 9:30, create a short straddle at 11:30, as well as create a short straddle at 1:30. So once you create a short straddle, just place a 40 point stop loss. So this time we are not keeping a 40 rupee stop loss, we are keeping a 40 point stop loss. So I hope this is clear. So let me just explain what exactly is a 40 point stop loss, right? So let's say at 9:30 we did a 17,200 short straddle, right? So for this, let's say CE I got it at 200, PE I got it at 180. So all I have to do is place a 40 point stop loss, which means stop loss for CE is going to be 240 rupees and stop loss for PE is going to be 220 rupees. So I hope this is clear. Can somebody confirm? If they have any doubt, please do ask. So this is just the basic of the system. So there are multiple things after this. It's about the right position sizing and right deciding what is the amount of risk you want to take. So there are multiple things to it. So first, I just want to make sure that you guys are clear with this particular thing. Right. Okay, I will tell you why exactly we have kept it point based and not percentage based. So the thing is, especially during Wednesday and Thursday, what happens, like since the market is volatile, the major reason for keeping it point based is the market is pretty volatile. So on percentage basis, on a Thursday, let's say you hardly receive premiums of around like 30 rupees on 12 o'clock expiry day. So 40% on 30 rupees is just 12 rupees. So that means you are keeping a stop loss at 42 rupees. So since the market is so volatile, the chances of your stop loss being triggered is very high. So that's the reason for some time we thought we'll just keep it point based till this volatility in the market comes down. So that's the reason right now we are using point based. So now I will just put this on stock mark and show this to you what exactly is going to be the result, right? So then I'm going to tell you few more key inputs which you can use it otherwise also to build your own system, right? So once this is clear, so let me just go to the browser. So here we'll go to stock mark. So meanwhile, we'll just take a look at what's happening to the trade. So the trade is going quite okay. So we are at a profit of 15,000 rupees, but I'm going to tell you why exactly we are going to, okay, or why exactly we have taken this 1,250. So the more about the position sizing and the risk, right? So let me just log in quickly and then go to the basket. Okay, these two I have to change the figures. So I'll just change these figures because okay, and forgot to tell you one more thing, guys. Whenever this thing happens, always bring the stop loss to cost. So this is one more very important thing. So bring the stop loss to cost so that you will be hit only on one side. So the stop loss always gets hit only on the single side. So let's just see if the stop loss is hit. No, it is not. So I'll just change it quickly. So yesterday I was just trying out some tweaks and yeah, so I think all looks good here. So I'll just test it out for one lot. Right. So you can look at the results here. Your max loss is 6,000 rupees. So you can see this system gives you a very good return to max drawdown of 20 and a very good expectancy of 0.54. So these two are way above average results. So one is 20 return to MTD as well as 0.54 expectancy. So usually expectancy they look for something like 0.2 to 0.25, and if you're able to get over 0.3 to 0.4, that means you're already doing an exceptional job. And once you're going towards 0.5, 0.6, that means the strategy is extremely good, and your return to max drawdown is 20. So even this is a very good number. So one thing you have to note here is per lot. Your max loss, let's say you have 3 entries, all 3 entries stop loss gets triggered. So your 9:30 a.m. stop loss gets triggered, your 11:30 a.m. stop loss, and 1:30 a.m. 1:30 p.m. stop loss. Let's say everything gets triggered. What is your maximum loss? Your maximum loss is going to be 6,000 rupees. So here, what you have to make a decision is regarding how much are you actually ready to lose per day. So this is a very important decision which you have to make prior to taking the trade. Let's say your capital is, let's take an example of 10 lakh. So if you're taking a capital of 10 lakh, and let's also assume that you're ready to risk 3% per trade. So let's work on this assumption that you're ready to risk 3% per trade on a capital of 10 lakh. So what is your max loss? Max loss per lot in the worst case is going to be 6,000 rupees. So what is 3% of 10 lakh? That is going to be 30,000 rupees. So that means you can size your position in such a way that you will be going 5 lots in the morning, 5 lots in the afternoon, and again this is 11:30, and 5 lots in the afternoon session at 1:30. So this is if you are willing to risk 3% per trade. So let's say all the stop loss gets triggered for all the trades, then you are just going to lose 3% of your capital. But here what we are doing is we have kept a limit of 3 lakh, or this is almost close to 0.75% of our trading capital. So per trade, the maximum we would like to lose is just 0.75% of our total capital. So now let's say I am ready to lose 0.75% of the total capital, which is 3 lakh. That means what should be my position sizing? 3 lakh divided by 6,000, which is 2,500 per trade. So this has to be my position sizing, 2,500 per trade, or this is nothing but 50 lots. So you first have to make up your mind how much you want to lose per trade. So right now we are using 0.75%. You can maybe use little higher, slightly higher, 1%, 1.5%. First make up your mind how much you are willing to lose in the worst case. Once you have done that, once you have decided how much you want to lose in the worst case, then divide the maximum loss by the amount you want to lose, and then you will derive at your total number of lots that you should be shooting. So I hope till this point everything is clear. In case if you guys have any doubts, please let me know, because there are few more things which I would want to tell you after this. Okay, 6,000 is nothing but the maximum loss. Let me just tell you what exactly has happened here, right? So, what is the lot size of Nifty? So, lot size for Nifty is 50, right? So now what you're basically doing, you're at 9:30. Let's come to 9:30. So at 9:30, you're placing a 40-point stop loss on CE leg and 40-point stop loss on PE leg. So I hope this is clear. At 9:30, we are placing a 40-point stop loss on both, right? So now, after you place a 40-point stop loss, what you are going to do is, let's say your CE stop loss is now triggered. So the CE stop loss gets triggered. You are going to bring the PE stop loss to cost. So once the CE stop loss gets triggered, bring the PE stop loss to cost. So in this case, let me know, what do you think is the maximum amount of loss? So how many points is the worst you are going to lose? Right. So the worst you are going to lose is 40 points. Why? Because one side the stop loss gets hit where you lose 40 points. The other side you have got it back to the cost. So that means you only end up losing 0. So technically your max loss is 40 points. So now 40 points into what is the lot size? 50. So 40 into 50 is nothing but 2000 rupees, right? So in 9:30 entry, you are going to lose 2000 rupees in the worst case, right? So 9:30 entry, worst case is 2000 rupees. Then 11:30 entry, worst case is again going to be 2000 rupees, because you are going to use the same system. Place a 40-point stop loss, bring the stop loss to cost, right? Again at 130 entry, you are going to lose 2000 in the worst case, right? So let's say you lose 2000, 2000, 2000, where you end up losing totally 6000 rupees in case if all the stop loss is triggered. Let's say your 9:30 stop loss is triggered, 11:30 stop loss and 1:30 stop loss. In the worst case, you're just going to lose 6000 rupees. So now you know what is the loss or maximum loss that you're going to have in a particular day. So next, it's for up to you to decide how much of the capital you are willing to risk per day, whether you want to risk 1% or whether you want to risk 2% or 3%. So, okay, bringing to cost, nothing but, let's say you have entered at 200 rupees, you have placed the stop loss at 240 rupees. So once the stop loss on the other side gets triggered, you are going to bring it back to 200 rupees. So I hope this is clear. Okay, the 3 lakh part I will just explain, but I hope that this is clear how exactly we are getting a maximum loss of 6000 rupees in this trade. Okay, nothing is square off entry. So the thing is here, like people had doubt whether you had to square off the position. So all three will be running simultaneously. You don't have to square off the other before you take the 11:30 or 1:30 trade. So let everything run simultaneously and you don't have to square off the other one, right? So now let's okay, one of you in the chat section can tell me what is your capital and how much are you willing to risk per day. So we will calculate for everybody's capital. So maybe we'll take few examples and calculate. Later I will just add my own example, how much we are willing to risk and so on. Okay, so here we have Chates. So he says he has 12 lakh and he is willing to risk 8k, right? So that means he again has to go just 8k on 12 lakh is 0.75%. So the thing is, with the system, since the max loss is 6,000, he won't be able to go more than one lot, because one lot is going to give you 6,000. Two lots is going to give you a loss of 12,000. So that means it will be more than his desirable loss. So that's the reason he can max go only one lot. So now let's take another example where we have Escobar legacy. So he has 5 lakh capital and he is willing to risk 3.5k. So the thing here is, since one lot itself is giving you a loss of 6,000, so here what you can do is maybe cut down on one trade, because you don't want to be losing more than what you desire. So with one lot, three entries, uh, your max loss is 6,000. So if you go one lot all the time, that means the chances that if all the stop loss is going to get triggered, your loss is going to be double up for the desired amount, right? So here I will give you my own example now. So I want you guys to tell in the chat section how much lots or how many lots should I enter. So our capital is 4 crore what we deploy for trading. So we have a rule that per trade we are going to lose 0.75% only, right? Per trade we are just going to lose 0.75%, which is going to turn out to be 3 lakh. So now I want you guys to tell me how many lots should I go. So max loss per trade is 6,000 rupees, right? So I want to make sure that my max loss is just going to be 3 lakh rupees. So how many lots should I go? As most of you got it, we have to go 50 lots. So I hope this is clear. So we have to go 2,500 quantity or 50 lots. But if I come over here, you can see that I have just entered 25 lots. So technically I should be going 50 lots, but here I have just entered 25 lots. So you might ask me, what exactly is the reason behind this? So instead of 50 lots, why have we entered only 25 lots? So let me show you one more statistics where we have tweaked the system little so that your performance improves. So before we move on to that, I just want to make it clear that all of you are clear with what exactly we are discussing. So if there is no doubt, then I will just continue with what tweaks we have made to the system just to improve the performance of the system. And meanwhile, if you guys are liking this content, do not forget to hit the like button and also share this video, share this live stream with your friends. So we have around 600 people right now watching. So all of you, please do hit on the thumbs up button if you're liking the content. Okay, so now since most of you are clear with the concept of what we are doing, yes, you will definitely get the recording of this. This will be put up on the channel itself. So I will just be moving on to tell you what tweaks we can do to the system to make sure that your system is going to give you better results, like more profit, lesser loss. So the thing is, let me just come back here and let me go to an individual day, right? So what we are looking at here is a basket, but I'll just go to an individual day. So Nifty fixed stop loss, so 930 entry. So I'm just going to backtest this result. So here you can see one thing. So let me just filter it out based on day, right? And we will just look at Monday, Tuesday. Okay, let's look at all the days except Friday. So here, or let me just put all the days. I just want to show you a statistic, right? So let's just go by expiry itself. So here I'll show you one thing. So totally we have somewhere close to 304 plus 459. That is around 763 days. So totally we have 763 days. So one thing you have to make clear is that we are using this system right now. The main reason for this is the market is volatile, because the other system was not working that great because the market was very volatile. The stop loss was getting triggered on both the sides. So that's the reason right now we are using the system. The thing is, we might have to use one more system when the market condition changes. So it's just that you just have the systems ready. So when you might definitely know at what at what market condition what system is going to work. So the thing is, let's say the market is more or less flat, and in such cases a percentage stop loss might work better than a point based stop loss. So what I'm just doing here is giving you an example of what is happening. So now out of 700 days, around 240 days, so 240 days no stop loss has been triggered, and 450 days one side stop loss has been triggered. So we will just look at 750 days. In this 250 days, no stop loss is triggered, and on the remaining 500 days, either one of the stop loss is triggered. One or two stop losses are triggered. So I hope this is clear, right? So totally we backtested the strategy again. So out of the 700 days, that is 459 and 304, we have zero stop loss hit counts on 242 days, one stop loss hit as well as two stop loss hit counts on almost 515 days, right? So that means 66% of the times your stop loss is going to get triggered. One stop loss is for sure going to get triggered 66% of the times. So now let's say your stop loss is actually getting triggered 66% of the times. You can see that most of your profits will be actually made once your stop loss gets triggered. So let me just remove these. So the thing here, what you can see is, let me just remove the two stop loss also. So you can see out of the 2,40,000, whatever the overall profit you had, so when one stop loss got triggered, you are making close to 2 lakh rupees. That means your major chunk of the money will be made once one stop loss triggers and the other one goes down all the way, because you are mainly playing the delta move. So even you will end up making the profit once no stop loss also gets triggered. Even here you will end up making somewhere around 2,90,000. So that means your real profits are only during these two times, either when one stop loss is triggered or when no stop loss is triggered. If two side stop loss gets triggered, that means you're going to lose quite a lot. So let's just see what happens if your two side stop loss is triggered. So you can see that with your two-side stop loss being triggered, you have a loss of 2,27,000. So our idea here is, even if we reduce our profits slightly by on these 2 days, that is on these 242 days as well as 407 days, even if we can reduce the stop loss, the overall profit slightly, and if we can reduce this by a major amount, that is when two stop loss is being triggered, if we can reduce this by a major amount, then that itself is going to be a very good system. I hope you're understanding what exactly we are discussing about. So your majority of profit is made only when no stop loss is triggered or one stop loss is triggered. That is 242 plus 407. So overall it is going to be somewhere around 650 days is when you make your majority of the profit, and your majority of losses happen on remaining 115 days or 114 days. So your idea here is just to make sure that in this 114 days, you're trying to reduce your loss. So I hope this is clear up until now. So there is a 66% of times the market is going to trigger one stop loss at least. So I'll just note down some statistics. So we have 67% chance that at least one stop loss is triggered. Then we have a chance of 80% plus where we actually end up making. So when no stop loss is triggered or one stop loss is triggered, we end up making a profit. So 80% of the times we usually end up making the profit, and remaining 20% of the times eats up half of the profit what we have made. So remaining 50% of the profits will go in the 20% of the times. So once these two are clear, I'm going to tell you what exactly we are planning. So you guys now can respond in the chat section whether this is clear, what we are trying to do. So this 20% of the times when a stop loss gets triggered, we are basically trying to reduce the loss. So remaining times, it is okay even if we don't make huge profit, we will try to reduce the loss on the remaining 20% of the times. So that's great. So now I will tell you what exactly we are planning to do. So this took quite a lot of time. So it's almost around half an hour since we are discussing about the system. So that is because there is a slight tweak into the system. So that's the reason I wanted to discuss this with you, right? So the tweak to the system is fairly simple. So what we have done is, we know that 67% of the times the stop loss is actually going to get triggered. So how many lots are we supposed to go? We were supposed to go 50 lots, right? So since we are supposed to go 50 lots, so what we are trying to do here is, if you observe, most of the times when one stop loss is triggered, your overall position will always be in a loss. So let's say your stop loss goes and gets triggered on one side, your overall position will always be in a loss. That is because one side would have moved 40 points, the other side would have hardly decayed. Maybe it would have decayed around 25 points and so on. So you will be at a loss of easily around 7 to 15 points always once your stop loss is triggered. So that's why we thought, anyways, when the stop loss gets triggered, you will be at a loss of around 7 to 15 points. So for this reason, why should I actually enter the full quantity before itself? So 66% of the times the stop loss is going to get triggered. So why exactly should I enter entire quantity in the first place itself or in the beginning itself when I know 66% of the times I'm actually going to go to a loss in some time. So that is because 66%, we saw that 67% of the times one stop loss is going to get triggered, and when one stop loss is getting triggered, generally you will always have your position under a loss. So that means if I am going full quantity, 67% of the times I will always start off with a loss, and later I must hope that the other leg decays, so I end up getting the profit. So this happens most of the times. So I hope you guys are understanding what exactly we are discussing here. So when you do a system based trade, place a stop loss on call leg as well as put leg, and if one stop loss is going to get triggered, so that means usually you will always be in a loss with the other leg. So very rarely you actually end up going to profits, right? So the idea here is that means when 67% of the times the stop loss is getting triggered, that means 67% of the times you will be in a loss during the trade. Only remaining 33% of the times you won't have this loss, right? So now when one stop loss is triggered, so instead of losing 10 points on 2500 quantity, I would have just lost 10 points on 1250 quantity. So that means 67% of the times, instead of having my loss at 25,000, I would only have my loss at 12.5 thousand. So this is when the stop loss is actually getting triggered, right? So I am basically trying to save my loss when the stop loss is being triggered. So instead of a loss of 25,000, so when I say 25,000, I'm more or less meaning, let's say C triggers the stop loss. This would have gone from 200 to 240, and let's say P would have fallen from 200 to 170. So there is a 10 point difference. So this has gained 40 points. This has only decayed 30 points, right? So now I have just lost 12,500, and at this point I will end up adding further 1250 quantity. So from here, let's say the market comes back and triggers the stop loss. Even then I'll be losing only. So let's say the market, so from here the market comes back and triggers the stop loss. I will just be losing somewhere around 80,000 instead of one full lakh. But let's say from there on the market ends up moving in one direction and huge decay happens. So in that case, I will be usually gaining double of what I would have otherwise. So the idea is pretty simple. We will add the remaining quantity once the stop loss is triggered. So you don't have to add the quantity right away. So once your stop loss is triggered, you can add the remaining 1250 quantity. So right now you can see that the market right here is absolutely flat. It hasn't moved anywhere from morning. So it opened around 17,200. We have almost spoken for an hour and the market is again at 17,200, and even Bank Nifty is at 35,500 itself. So it's an absolute flat market, and in case if we see any move towards the end, so then we will let's say the stop loss gets triggered, we'll end up adding the quantity, and also if required we can also end up adjusting. So otherwise we'll just let the decay happen as it is, and if we end up getting somewhere around 80 to 90k today, it is going to be good for this particular week, because we already have, if I'm not wrong, we already have somewhere around 3 to 4 lakh profit this week. So we can end up this week with a profit of around 5 lakh. So one more thing is that no system is going to give you profit during all the seasons or during all the time in the market. So each system will have its own drawdown phase. Today one system might be working, so tomorrow the same system will stop working and some other system might end up giving you very good profit. So the thing is, there are two things. both are acceptable. One thing is you continue to use the system, you go through the drawdown phase and later come back up. So the second thing is, let's say you keep doing a particular trade, and let's say the system enters a drawdown phase, it is not doing well for some time. So you slowly reduce the quantity in that system and add one more system to your trade, which is working well in the current condition. So later, once your system comes out from the drawdown, you can again start using that fully. So this is one thing which I wanted to share. So I just want to make sure that you guys are clear with what exactly we are doing. So we have just entered a simple short straddle, kept a 40-point stop loss, and our idea is, once the stop loss is triggered, either one side the stop loss is triggered, we are going to add another 1250 quantity on the other side. So here you have to make sure that first you are very well defined with your risk. So you know how much you want to lose, how much you are willing to lose, and also make sure that once you're once you know what exactly you want to lose, you are also okay with the psychology. Let's say you say that you want to, or you're okay with losing 5%, but that might not always be the case, because let's say 5% on 1 crore or 5% on 10 lakh is close to 50,000. In case if you are not ready to lose 50,000 capital in a single trade, it is going to affect your psychology. Let's say you say I am ready, but let's say when the M2M starts to swing, it starts to affect your psychology. So even that is not good. So first try to decide what is the amount of loss you are okay with handling, and later you definitely can size your positions accordingly. So I hope all of you are enjoying the stream. If so, just do hit a like button, and also let us know in the comments what you feel about the stream and what do you want to know more. So we will just take a small 10 minutes break, and we'll be back by 10:45, and we'll reply to the chats, and also in case if there is any questions in the chats, we'll start to address it. Yes, so let's say one stop loss gets triggered, we'll only add the winning leg. We won't add the other leg. If there's good decay on Friday, then you will still end up gaining. So obviously, the idea here is to bring down your losses. So if there's good decay, you anyways have the quantity. It's not that you are not having any quantity. So you will still end up making pretty good profits. So 17,200 was selected mainly because it was at the money at the point when we entered. So that's the reason we did 17,200. So we are doing a short straddle here. So on what basis the stop loss is defined? So the thing is, first we wanted to keep the system simple until the VIX actually comes down. So there was a main issue with the percentage based stop loss. So before, if you remember, we are using this 30% stop loss. So when the premiums were very high, so Bank Nifty was having a premium of somewhere around 600, 700, the stop loss itself is going to be around 210, 250 points. And you're seeing wild moves in the market, and some days are extremely trending. So that's the reason, until the VIX cools down and everything settles, keep using this system, where it is more of, this system is more of, you have a fixed stop loss and fixed point based stop loss, not a percentage based stop loss. And once the stop loss gets triggered, the other one you just bring it down to the cost, and if this gets triggered, you go home with a limited loss. So again, let's say you add the extra quantity, now the market reverses and hits the stop loss. You were ready to lose 2000 per lot in a trade. So, but trust me, even if the market reverses and hits the stop loss, your loss is not going to exceed 2000 rupees per lot. So in this case, we are ready to lose 1 lakh per trade. So that is at 9:30 trade, we are okay in losing 1 lakh. At 11:30 trade, we are okay with losing 1 lakh. And 1:30 trade, we are okay with losing 1 lakh. So let's say the stop loss actually gets triggered and I add the quantity and it goes back and hits the stop loss to cost. Even then, my loss is going to be less than 1 lakh. Yes, we do shift the other leg to the average price. There is good decay on Friday. So the thing is, on all the days, there are pretty good decay. But obviously on Thursday as well as Wednesday, the decay rate is higher. So the thing is, if you look at on basis of points, so then again Thursday is obviously the highest where you get the highest decay. So there's no second question about that. But if you look at in basis of percentage, the highest decay you will obviously find on Wednesday and Thursday. But maybe if you look at Wednesday and Friday, point wise, they might decay more or less the same. Let's say today Bank Nifty premium is around say 450 500 rupees. So today also it might decay around 50 rupees, and on Tuesday or Wednesday also, Tuesday also it can decay somewhere around 50 rupees. But the thing here is percentage wise, the decay will be more on other days. So point wise, like it will be more or less the same on Friday as well as Tuesday. But on Thursday and Wednesday, obviously the decay will be much higher. So stop loss for Bank Nifty in points, we don't have one. So like we haven't built a system for this around Bank Nifty, but like you can definitely try out and see what works. So in a high VIX environment, we felt the system was working good because it had a pretty good return to max drawdown and expectancy. Yes, theta decay is going to be the same irrespective of which week it is. So whether you take first, second, third, or fourth, the decay is going to be the same on all the day. Like first, second, third, or fourth Friday, the usually the decay what you get on Friday is going to be the same, until and unless you have some event specific thing which is happening. So then you might have some difference. So market is so sideways, and we haven't seen the decay happen yet, and that's the reason we are more or less flat. So there are two ways to play this. The thing is, one, you can enter huge quantities. So the other option what we have is we can do it maybe like say 25,000 quantity. We can go short on Nifty and get around 3 points. So getting 3 points is going to be pretty easy in such markets. So maybe a consolidation of around say uh, 10-15 minutes is good enough to give you 2 to 3 points. So let's say I go 25,000 quantity and I can take easily around 75,000 and get out of the market. So here I have gone 20 times lesser. So you can see that with this I have already got around 7 to 8 points. So 8 points is something which we have already captured, because with only 1250 quantity we have made around 10,000 rupees. So one thing here is you're not going huge quantity. So I am not going to go say big quantity, which is going to affect my psychology. So even if I get smaller profits, I'm just going to play with smaller quantity. Maybe something like 1000, 2000 quantity is more than sufficient to make good profit in the long run. So both are okay. It is just about what suits you more. For me, I am not comfortable holding huge quantities. But if you know, like Shreyas Bandi, so he does a fantastic job with managing such huge quantity. So if you see his videos, he usually goes around 20,000, 25,000 quantity short, and he manages his position pretty well. So I am not so skilled in managing such huge quantity. So I just stick to what is more comfortable for me, that is going with small quantity of 1200 to 2000. So this is what gives me more comfort. So this is what makes me feel that okay, this is now more or less manageable and I can manage this. So it's up to you what you prefer, like how you want to take or work in the market. So ideal capital, as I told you, you have to decide based on your risk. So for example, let's say you have, let's say a person has 20 lakh and the second person has 10 lakh. Let's say this person is ready to lose 5% of the capital with 10 lakh, and the other person who has 20 lakh is ready to lose 2.5% of his capital. So both of them essentially have to go the same quantity, even though the capital size is different. So Bank Nifty short straddle, I believe that I am expecting Bank Nifty again to be range bound for this week. So yesterday also I shared a strategy. So let me just show you that calendar spread strategy. So let me just go here. So this is, I will show you one more trick, guys. In case, let's say, you want cash margin. So generally what happens is, let me just remove this and show you these. So you can just ignore this M2M figure. So the trades wouldn't have happened properly. So I will just explain you what exactly we have done here. So this is going to give you overall a no profit, no loss situation. So because you can see that I have sold a 15,500 put. I have purchased a 15,500. Sorry, I have purchased a 15,500 put, sold a 15,500 call. I have purchased a 18,000 call and sold a 18,000 put. So now you might ask me, Saket, what is the rationale behind doing this? So, okay, let me just answer this question. For people with capital less than 1 lakh, so this is one thing which I would like to tell. So the thing is, tomorrow we again have a special announcement. So one thing is we started with a very low capital of around 25,000, 30,000 initially when we started. So that time we had leverage of 20x. So what you have to note here is when we had 20x leverage, the 30,000 what we had was worth 6 lakh because we could use so much for our intraday position. So since we had so much leverage, we were able to enter the trades and make some profit. So today, if someone gives us 30,000, we won't be able to trade. That's the hard fact that what we have to accept. So the thing is, without leverage, we won't be able to trade with a capital of 30,000. I will tell you what happens. The reasonable expectation, what you can have in market is around 2 to 3% returns per month. So 3% returns per month is something you can have it as a reasonable expectation. The problem now, what is going to happen with this? So let me just show you open Bank Nifty meanwhile. So the problem with this, what is going to happen now is, let's say 3% on, let's take an example of 30,000. How much do you think it is? 900 rupees. So now if I trade throughout the month and punch in 2 orders per day, I'm going to lose 800 rupees just in brokerage. So I am not going to make profit in the long run with trading with a small capital because most of my money is going to go to charges. Even if I buy and sell every day, so it is going to cost me 40 rupees for buying, 20 rupees for buying, 20 rupees for selling. So this way, let's say I do it for 20 days, I'm going to lose almost close to, or 25 days, I'm almost going to lose close to $1,000 just in brokerage. So now you tell me with 30,000, even if you make 3% a month, you are still left with just negative figure. So you haven't even become positive. Let's say you achieve 5% a month. So that is going to be somewhere around 1500 rupees, where achieving 5% a month, you will be left with only hardly 1%, which is 300 rupees. So since we had leverage, we were able to make use of it, because 30,000 more or less with 20x became 6 lakh. So that's why we had a advantage over there. But today, without leverage, it has become really hard to trade. So with lower capital, you won't be able to enter. That day with 6 lakh, we could easily enter 3 lots of short straddle. Today with 1 lakh, I still can't enter 1 lot of short straddle. So that is the hard fact, and it is very unfortunate because we feel pretty bad for people who want to start now. So we had a undue advantage back then, but so the thing is, tomorrow we have a special announcement where we want to pass on this advantage to other people as well. So tomorrow we'll be coming out with one more special announcement video, and this is specially. So aren't you guys able to hear? I'm sorry. So like. So aren't you guys able to? So was the thing I told about the low capital clear? Because that's when I started to see comments saying that there was no audio. So just now I discussed about the low capital. Was the part clear? Like, were you able to hear what I spoke? Okay, so because I just wanted to make sure, because like since many couldn't, it was not audible for many, so I just wanted to make sure if that was okay. The screen is not blurred, guys. So you can change the picture quality from your settings. So just go to settings on the top right corner. The stream is being done at full HD. So then all you have to do is click on advanced, and you can choose the full HD resolution to stream. So I'll just take a small 10-15 minute break. So I'm very sorry if some of you guys couldn't hear. So I'll just be joining you back around 11:15. Maybe I will just take a small tea break or something. I'll just have a small cup of tea and I'll be back. And I will just address all the questions later on, and I will also, in case if you haven't heard, I will definitely explain whatever I told. And yeah, guys, so I'll just be back. So meanwhile, 11:30 we will have one more entry, and I also hope that you guys are clear with the system that we are discussing right now. So the members who are selected for the mentorship will be announced tomorrow. So we are really overwhelmed because we had got more than 1,800 responses, and we have finally shortlisted it to 46, and we have to do further shortlisting. And tomorrow we will be announcing the top 5 people who have got selected. So office tour, I will definitely show by next month. So the reason is a lot of interior work is going on. The setup is not completely done. So we have maybe completed 90% of the things. We still have a small things, interior works to be done. So once everything is done, we'll definitely show the office tour, and most probably in under 15 days, 20 days, we should be done with everything, and later we will definitely shoot a office tour video. So what is the announcement tomorrow? That is something special, and I'm pretty sure this is one of the kind, and nobody today has ever done something similar. So that is something which I can definitely vouch for. So that is something to also be kept as a suspense. Tomorrow you can see in the video what exactly is the announcement. Yes, no adjustments are done, and yeah. Okay, this is not the trade, guys. Sorry, I will just go back to Nifty trade. So this is the positional trade what we had taken yesterday. I had discussed in the video. So let me just go back to Nifty, and I'll just filter it out because I showed you why exactly I have taken this. So I'll again show you. I will tell you what is the issue. So from this, we have got somewhere close to 74 lakh of cash margin just because of this trade. So we are not going to lose any money here. Let me just show this to you on Sensibull. The issue is we have a lot of pledged shares and we don't have cash margin. So when you want cash margin, you can do this in the money shorting and you will be getting quite a lot of cash margin. Okay, so I'll just tell you on what basis we selected the 46 members. So we were, as I already mentioned, so the first criteria was test scores. So whoever got 4 and 5 were first shortlisted. So the initial this thing was test scores. 4 and 5 people, whoever scored 4 and 5 were shortlisted. After that, we took the trading experience. So we wanted people to have at least 3 years of experience. So 3+ years of experience while trading. So because one, the thing is, if you have more experience, you would have faced more losses and you will know more market situations or scenarios. So that is one more thing which I wanted to tell. So that is the second criteria. First is the test scores, whoever got 4 and 5. The second one was the trading experience of at least 3 years. And the next one was the capital. So we wanted to have people with at least 7.5 lakh plus capital because we had already mentioned that in the video. So that was the fourth criteria for selection. So when we did this, we got totally 160 people out of 1800. So based on all these three. So once we got this 160 people, so then there was a column, if you remember, based on why exactly you want to join the internship and more about yourself. So we read through the entire 160 know more about yourself column. So we wanted to have diverse set of people who are from various field, and also we were trying to give encouragement to women. So we at least wanted one woman in the mentorship. So out of 360 we could just find one woman. So that is a pretty disappointing number because it's hardly around 0.3% of the overall so we don't know how many in the total responses, but out of the top shortlisted, out of 360, we could just find one woman. So then we were looking for a diverse group of student as well as salaried as well as some professional. So a diverse group of professionals basically, and also people who have already experience and who have like are from different field. So this was a broader criteria what we are having. So right now we have 46 people shortlisted. So today we are going to decide the final 5 and we are going to announce tomorrow along with the special announcement what we are going to make. Uh, okay, so this is one thing which I wanted to show you guys. So you can see here that trade won't be happening. The options are not so liquid, but let me just show you this here. So what we have done is we have basically purchased this option and sold this option. Sorry, sold this option, purchased this option, and purchased this option and sold this option. So you can see that per lot we have a loss of around 60 rupees. So this is again more or less negligible. Per lot we have a loss of 60 rupees. But what it does is this trade gives you a overall cash margin of 75 lakhs. So right now we only have stock margin and we want some cash margin. So that's the reason we have taken this trade to get some cash margin. So this M2M updates very slowly because these strikes don't trade at all. So I'll show you this thing. So this thing is trading 10 points higher from the current price. So that's the reason the M2M here updates extremely slowly. So now let's just filter out and come to the main trade, and that is this thing 17200. So here right now we are running with a profit of 14,000. No stop losses are triggered, and we are going with half the quantity. So before we go to 11:30 again, announcement timing, it will be usually the normal video itself. So there will be no live. So we'll be putting out a normal video around 7:30, 8 o'clock tomorrow. So I will just take a short break. So this is something which I had to do 45 minutes back. Sorry, 30 minutes back. So before we get on to the 11:30 entry, I will just take a 15 minutes break and I'll be back. Later we'll again take the entry and we'll also discuss more upon the positional strategies and other strategies. Yes, slippages you do get. So it's more or less you will be like paying 0.5% slippage. So you get slippage while entering, but it's more, again as I told you, you get either you if you want cash margin, either you have to take a loan on an interest, or you can just do this small trick where you pay 0.5% as interest in terms of slippages. So you technically don't pay interest, but you end up paying for slippages. And mentorship details will be announced tomorrow. The final list will be announced tomorrow. So I'll just be joining again back by 11:20. So 11:30 we'll take a new entry. So thank you for joining the stream, guys. So before the break, in case if you haven't hit on the like button, so do hit on the like button and also share this with your friends so they can also join the live stream. Hi everyone, welcome to the video. So I hope you're able to hear me and it's audible. That's great. So we have another 5 to 6 minutes to enter the trade, and right now nothing has happened. So neither the stop loss is triggered, so we didn't have to add any extra quantity. So uh, So by 11:35, 11:40, once we take the trade and put the stop loss, we will start answering the or taking up the Q&A in the comment section. So we would hope for is the market to stay as it is, so that like we get some good decay. Even if we get a trending market, it is absolutely fine. One thing we definitely don't want is a completely V-shaped market. So the thing is, you usually put the stop loss on the entry price rather than the average price. So just to be more specific, so whenever you're doing with the system, what matters is you will have to take the proper data. So let's say you might have got something at 185, but the actual 11:30 opening was 182. So that time, for the same reason, we'll refer the chart and see what is the opening at that particular price, particular time, and we'll put the stop loss on that. Yes, we have idea of doing mentorship regularly, at least once in a quarter. So the idea is right now this is the first batch. We have never done this before, so we thought we'll start off small. Maybe if the response is good and if we are able to deliver good quality service, then we'll definitely try to have around 10 to 15 for the next batch. So for this, since we were starting small, we wanted to just start off with around 5 people. You can mail us at contact at optionables or even optionablesllp@gmail.com. So contact at optionables, you will receive the response within 1 or 2 days. Yes, we will try to record the mentorship program. If not fully, we will just definitely try to show a glimpse of what exactly happened in the mentorship program. So that part of recording will definitely be available. So, like, if somebody is interested in taking the test alone, then we can arrange for that. So that is not an issue. But right now, since we have already started shortlisting, so any new entries won't be considered. But if you are willing to take the test, then we will be more than happy to share the link. So that, as I told you, we have finalized around 46 names right now out of 1,800. So we have the last 46 list. So in that we have to further filter out and select around 5 to 7 people. So since a few of them are really good, so we were thinking whether to make it 7 or if possible, we will try to make it 7 instead of 5. Anyways, we'll be announcing more about that tomorrow based on the results what we get after filtering out. Uh, so the thing is, right now you can actually use the same link to fill in the form. So the responses won't be considered, but we have opened the form again. So if you want to take the test, you can use the same link to take the test. So the thing is, For the iron condor, so one thing what we should have mentioned in the video, which I haven't, is to use this in a low VIX environment. So I'll tell you what is going to be the issue. So I did realize that since I got 2 3 emails regarding the same. So I will tell you what exactly ends up happening. If you can see, look at the premiums right now for at the money, right? Let me just go to Bank Nifty. Test link is the same Google form link for registration. So there only in the second page you have the test link. So you can see that this premium right now is very high, to be honest. So usually at the money when the VIX is low, you find it around 350 360 rupees, but today it is trading around 600 rupees. So obviously when you go 500 points, this is at 300, and then you go further 300. So the thing is, here in such situations the loss will be extremely low, but the major issue what you are going to face is definitely going to be the fact that market is not going to stay in the range of 500 points. It is going to move violently in maybe 1000 points up down. So that is where the major issue comes, and that's the only issue with this in the high VIX environment. In the low VIX environment, it works exceptionally well because we personally have done that. So any strategy we share till today is only after we do that personally. So till we actually do that, we never just give out strategies based on a paper test or something. So if we are suggesting something, it would be definitely once after we have tried it out personally. So okay, we are now coming towards 11:30. We will take the new entry. So I want you guys only to tell me the stop losses. So nothing has triggered the stop loss. Looks like the market is slightly trying to recover. Anyways, again we will have to go with the same entry of 17,200. Here I am using a basket order. So to avoid sudden slippages, I am using this market protection right over here. So I will explain maybe later on what exactly is this. So let's enter this right over here. So let's see if we have got the entries. So we have 2500 quantity as of now. So one thing is, as I told you, for the stop loss to match with the actual backtest result. So we will first go here, add both of them to the market watch. So now I want you guys to tell me the stop losses. So it's a very simple system, so you don't have to spend a lot of time. Let's go to 1 minute candle. So we'll get to know the exact price at 11:30. So it is 194.8. So what do you think should be the stop loss? So as we have discussed in the system, it's 40 points higher. So how much do you think is the stop loss for this trade, for the CE leg? So that's right, guys. The stop loss will be at 235 rupees. So it's like 40 points higher. So 235, I'll be placing a stop loss. So I'll be placing for 1250 quantity because remaining has already been placed. So 235 and 236. So now we will also look for P. So P, the opening price is 177. So again, what do you think would be the stop loss for 177? So you guys have cracked it yourself. So 217. It's a pretty simple system. So if you want to follow it also, it's a pretty simple one. So 217, 218, and I'm going to submit it. So you can see we have properly 4 stop losses placed, 2 in the morning, 2 placed right now. So all we have to do now is wait and watch. In case if the stop loss is triggered, we'll add the remaining quantity. So because 67% of the times the chances are that the stop loss will get triggered. If that happens, we'll add some additional quantity. So I have explained before why exactly 40 points. There is no particular reason as such. It's just that we just want to get hit with the one leg soon so that the other leg can give us good decay. So apart from that, there is no explicit reason why exactly we have chosen 40 points. So we are right now using this particular system for the high VIX environment, because when it comes back to the normal VIX, maybe we can go back to the same strategy which we were using of the bank nifty. So for option Greeks as such, I personally haven't read any book, so that's the reason I won't be able to suggest you which book is good for option Greeks. So I wouldn't be able to like guide you well with this particular answer question. So what is high VIX and low VIX? Actually, the thing is, usually you see what exactly is the VIX is just going to tell you what is the amount of movement expected in the Indian markets in a year. So more or less uh, you can more or less put it that way. That what is the movement expected in the Indian markets in a year with a one standard deviation event. So for example, if you look at this, so if the VIX is at 23, that means there is a 67% chance that the market is going to move 23% up or down from this particular point within a year. So that's the broader idea of VIX. So obviously 23 VIX is very high because you can't expect the index to move 23% up or down every year. So how much can you expect the index to move up or down? Somewhere around 12 to 14%. So if you look at the longer term average also, it is going to be around 12 to 14%. So you can see the longer average comes somewhere here around 14. So this is 2008 when VIX was formed. So like when VIX started. So in 2008 you were obviously expecting a very high VIX, because from that point you can easily expect the market to move 50% up or down. So this is during COVID when the VIX had crossed 80. So we saw a move of 80% within a year. So now the VIX is around 23, but you can see the average comes to around 14, 15. So this is the amount of movement what you can expect in Nifty with a 70% probability. No, we won't be doing live trade every day. So today, since uh, like yesterday was expiry was done, and today we didn't have a lot of position overnight carried, so we thought, okay, we'll just do live trading today. There is no specific reason as such. As I told you, you can build multiple systems and everything is going to work beautifully. It's just about which system you would prefer first in the first place, and second, one, are you comfortable executing the system day in day out? So those are the only two answers you need to have, and you can definitely execute any system with ease after that. Okay, ratio spread I will definitely explain. So just give me a moment. I will definitely put more light upon the ratio spread strategy which we have taken. That is this Bank Nifty ratio spread. So this is a very interesting question. How to improve the trading psychology? The answer to that is pretty simple. You shouldn't care about trading. So the thing is, forget about putting your mind and emotions into trading. So then you really don't have to worry about the trading psychology. So now you might ask me how exactly that can be done. So the answer to that is also pretty simple. When would you not care about your profit or loss? When your profit or loss is very small compared to percentage of your capital. Let's say you have 1 crore rupees, and would you really be concerned in losing 10,000? Not really. But if you have 10, so let's say 1 lakh rupees, would you be concerned with losing 10,000? Definitely yes. So trading psychology is more about being as less emotionally involved as possible in the trade. So to do that with higher position sizing, it is going to be hard. So eventually maybe you are going to get there, but it will be hard with higher position sizing. If you maintain a low position size, you can definitely do that. So as I told you, there is nothing called as this is the right level to do this. All the systems are going to work all the time. So just that some systems are going to have a drawdown, and for the same reason, like if you have multiple systems, while one is having a drawdown, the other one will definitely help you answer. So I would like to thank Ramabhadran Ganesh sir for the super chat. Okay, sorry guys. So let me just. There was a question regarding yesterday's ratio spread, and thank you, sir, for the super chat. So I will just show you regarding the ratio spread, and then there was a lot of questions on Twitter regarding the portfolio also. So I will also share what portfolio we have and what stocks or shares we hold. So both I'll be showing now. Right. So I will tell you in high VIX environment, ratios are going to actually um, work out pretty well. So let's go to April month, 28th of April, right? So what am I expecting from the market? So let me give you a broader expectation. I am expecting the markets to end above 34,000. So I will actually end up taking this ratio spread right in front of you, right? So I am expecting the market to end above 34,000. So all I do is buy one 34,000 puts, say 20 lots. So this is my expectation where I'm sharing, and I will actually end up executing this right in front of you now. Okay. So now the idea is I am bullish on the market. I am expecting the market to stay above 34,000. in case if let's say the market comes below 34,000, I still want to have a sufficient buffer. So now I have totally collected 669 points from this, right? So whenever you're doing a ratio, always make sure that you're doing it a credit spread. So you want to collect more premium than what you have ended up buying. So how much have I bought for? I have bought for 670 rupees. Now I have to try to collect little more premium than 670 rupees to actually benefit from this ratio spread. So let's say I go to 33,000. So this I will end up selling 2 times the quantity, 40 lots. So now you can see what exactly ended up happening. My idea was market is going to end above 34,000. But when I actually did this strategy, look where my break even is. My break even is coming at 31,800. This is almost close to 10% from this current level. So if the market is ending above 34,000, I am going to make 1 lakh profit. In case, let's say, the market ends up coming down to 33,000, I'll end up making the highest profit, and below 32,000, I'll actually go to a loss. So the thing here is, since I have so much buffer, 10% buffer, it is quite easy for me to adjust. So till the market actually comes below 32,000, I don't even have to adjust any position. So maybe after that I can end up purchasing a hedge or so on. So I don't even have to adjust any position. So this is one advantage of ratio spread. So let me just execute this, because since I actually have this view, right? So I will show you what are the other things you can do with ratio spread. Let's say I end up buying 33,000 put option, maybe say 20 lots, and I end up selling 30 to 400, maybe 40 lots. So you can see that I have pushed my break even further down, and I have increased my profits even more. Why? Because this time I have just gone 600 points away. So back then I went 1000 points away, but this time I have just gone 600 points away, and my profits is even higher than before. So this is one advantage of ratio spread, because since you have the in the money buy, so it's always going to be such a way that first you are going to benefit, only then you are going to go to a loss. So first it is always, let's say I'll just move to 4 or 5 days ahead. So you can see that now even if the market is actually falling by 2%, I'm not actually in a loss. So let's quickly move on to 8th of April. So at this point, you see, even though we are falling, we are just losing. Even though we have come down by 5%, the expected loss is just going to be 16,000. So as I move further on, maybe 18th of April. So here you can see, even though we have come down by 7%, we are still going to have a profit of 30,000. So this is how the ratio spreads are going to work. And look at your break even. Who won't be comfortable having a break even at 31,500? And the thing is, again, it's about the quantity over here. So in the worst case, let's say market opens 20% gap down. Okay, so we are going to come to 28,000. Tomorrow market is opening 20% gap down, right? So if the market is opening 20% gap down, how much is my loss? It is going to be 12 lakh. So am I okay with 12 lakh? Yes, I am definitely okay with 12 lakh. That is 3% of my capital. So what is the chance of a 20% gap down? Obviously, you can't have more than 20% gap down, because there is going to be a market freeze. This is the worst case scenario what you can factor in, right? So that's the reason. So I will actually end up executing this right in front of you, so you also get an idea. So we'll see what is happening to the market. Before that, the market is absolutely flat. So we'll take this April Bank Nifty ratio spread. Again, I will create a basket. So let me just go with 33,000 P. I will short. I will end up buying around say this time I'll buy 600 quantity, and let's go to 30 to 300 P and sell. Okay, sorry guys, I have to change the expiry. So 28th April expiry. Thank you Ravi Shankar sir for a super chat. So really appreciate it, and thank you so much for the support. So now you can see I have changed the expiries for both, and one thing I am working on is with the market protection, before which we are just going to look at the spreads between the prices, so just so that we don't have a lot of slippage. So this is going to be sorry 32,300. Okay, we are going to get a lot of slippages here, so we should be pretty careful. So we won't be going with this strike. So we'll see which other strike we can go with. So we'll go with 32,500. So here you can see the slippage is quite less. So we'll go with the strike of 32,500. So I'm just going with 600 quantity and 1200 quantity, and I will place the order for the same. So let me just check everything once, and I hope this 33,000 also has good liquidity. Yes, this is more than enough. You can see that hardly we are going to lose 1 point. And also Arshit sir, thank you so much for the super chat, really appreciate it. So we are just going to punch the orders right now, and I think it should be done. So both are punched with the market protection, so that we just avoid lot of slippages. So this should be here if I'm not wrong. So both are executed. In slippages we have just lost 2,000 rupees, and this is again quite expected. You can lose some amount in slippage. So what we have done here is 600 quantity, which is 24 lots, and this 48 lots. So you can see my break even now is 31,739, and I am very comfortable holding this. In case if the market is ending above this, I'll be making around 2 lakh rupees profit. So one thing that what you guys should note is we are just talking about the downside. Let's say tomorrow the market just ends up going to 36,800. You end up making half of what you are likely to make. You already would have got somewhere around 70-80,000 out of the total 1.5 lakh. And in case if the market is coming back at this point, you make the highest profit of somewhere around 4,57,000. So you can also see the total probability. It is showing 87%, but I am little more sure than 87%, maybe 95% sure that the market is definitely going to end above 31,700. Raja sir, thank you so much for the super chat. I really appreciate it, and thank you for supporting us. And even Devati Rajan sir also, thank you so much for the super chat, and thank you so much for supporting us. And yeah guys, so this is we are receiving a lot of super chat, and I am really humbled, and really thank you all for supporting us so much and sending us so much super chats. So I would definitely be addressing your queries as well. Okay, so if it crosses the break even, that is 31,700, what adjustments are we looking for? So first, the thing is, first we have to be sure of what is the maximum loss we are willing to take? How much percentage are we willing to risk, right? So again, there are two more things which I would want to tell before we move on to that. That is, this ratio spreads work brilliantly well in high VIX environment, because I will tell you why. You see the difference between this premium. You go 500 points away, literally 500 points away, and you're just having a difference of 100 rupees. But if the VIX is low, this is not going to be the case. So let's say the VIX is say somewhere around 17 or 15. So then the difference here is going to be much higher. So this is going to be somewhere around 300 rupees. This is going to be somewhere around 190 rupees. So ratio spreads are going to work superbly when the VIX is high, because no matter how far you go, so this is 33,000, this is 32,000. You can see that this is still giving you double. So if you double this, it is going to come to 520, and this is 420. You're going 1000 points away, and the premium has just dropped by 200 points. So since the VIX is high, you're going to get such brilliant opportunities. So now coming to the part of adjusting this trade. So let's say the market starts to come down. Tomorrow, let's say it comes down till here, we have a loss of 5 lakh. The market is at 32,000. So here there are various factors to consider. We'll just list it down one by one. So what is the first factor that we have to consider? So the market right now is at 32k. So the first factor what we have to consider here is, what is the max loss we are going to take? So let's say the max loss we are going to take is 10 lakh, right? So if 10 lakh is the maximum loss we are going to take, let's see where the 10 lakh level is going to come. So 10 lakh level is going to come at 30,000. So first thing I am going to do is purchase a hedge at 30,000 and limit my loss. So first I will limit my loss, and later we will think about coming to profits. So the most important thing is to limit our loss, and we'll purchase a hedge at 30,000. So now that means on the upside, if it comes anywhere between this level, you have some profits, and if it goes beyond this, you won't have any profit because you would have already purchased the hedge. So only during this range you will have some profits. So here we will have to again start working on few things. Let's say as the market starts to come down, so first most important thing what I touched upon is to limit your loss, and I would also like to thank Vasant Kumar sir for the super chat. I really appreciate it. So first thing what we discussed is about limiting your loss. Now we will try to see how we can start to reduce our loss. So there are two parts to adjustments. One is always about limiting the loss, and second is about reducing the loss. So the last part is about coming to profits. You don't even sometimes have to come to profits, as long as you can minimize your loss in the worst case scenario, right? So as it starts to come down, we will start going up and start collecting some additional premiums. So let me just give you an example right over here. So we'll come here. Let's say as the market starts to fall, so tomorrow it comes to 34,500. So tomorrow as it comes to 34,500, I can go and short 39,000 P of around 40 quantity, right? So now let's say it comes to 34,000, right? So as it comes to 34,000, you can go further, say around this thing 38,500 and short around 40 quantity. So now you can see, while you are doing that, you are pushing your downside farther and farther away. So every time you do that, your downside is getting pushed farther and farther away, and beyond a point you don't have to end up pushing it. So let me just show you why. So let's say I have purchased the hedge at 30,000. So this is the hedge at 30,000. So you can see that at this point you have okay, I think this should be 40. sorry, I will only have to purchase for 24 lots. The reason being, here I have already 24 lots of hedge for this 48 lots, so I'll only purchase for 24 lots. And let's say why I am telling this is beyond a point, you don't have to actually end up adjusting. So because you see, by this time you have completely gotten down your loss in spite of hedging it. In spite of hedging it, you have gotten down your loss from around 10 lakh to 26,000. Let's say no matter where it goes, you have just gotten it down to 26,000. Let's remove this, right? So now you can see that without even having to do some additional hedging, you have gotten down your loss just to around 5 lakh in the worst case scenario. So this is how easily you can start pushing your break evens down and finally limit your loss. So the first part is always making sure you buy a hedge and limit it, because as it starts to go below your break even, you don't want to take further loss. So then you are going to focus on reducing your loss. How exactly are you going to slowly make sure that the 10 lakh is going to become 6 lakh? Or let's not jump to 6 lakh directly. How are you going to make this 10 lakh into 8 lakh, 8 lakh into 6 lakh? And you don't have to come to profit. So this is one thing you have to remember. You don't have to come to profit. So tomorrow, if the market is going to come back, again, you will definitely be in profit, because from this point, let's say the market today is at 30,000. Look, where is your other side break even? From this point, the market literally has to come back 30% within a span of maybe 15 days or 10 days to actually make you lose on the other side. So this side you have anyways limited your loss. So on this side, the market has to come back around 30%. So which is not going to happen so easily. So this is how always just focus first on limiting your loss and later reducing your loss. So there are multiple ways to reduce your loss, and for that you will have to make sure that you have some money to adjust. So you don't put in all the money at once. So you should have some money to adjust. Abdul sir, thank you so much for the super chat. I really appreciate it, and thank you so much for supporting us. I hope you guys are clear with the ratio spread adjusting. So there are two parts to it. One, you have the broader view in mind, and later you end up taking the ratio spread based on the view. So first of all, you will have a pretty wide break even and you will end up with a decent profit. If something happens, the focus should be on first to limit your loss and later to reduce your loss. So since I already shared my view, I have taken the trade as well. So you can see this is the trade ratio spread trade what I have taken right over here. So now Nifty is also falling. So I really don't have to worry unless maybe Bank Nifty comes below 33,000. I will just leave this ratio spread to run as it is. If nothing happens, then we are going to get pretty good profits of 1.5 lakh. If something happens, I can actually keep you guys updated on the community tab also. So how exactly we are adjusting this particular trade. So now we are going to look at Nifty. We are going to come back to Nifty and see what is happening to the trades over there. So the market is falling, but stop loss has not been yet triggered. So we'll go to 17,200. So you can see that we are not seeing a lot of decay also. So we haven't got any decay. So I don't know if we will end up making a good profit today or not. Even if we can end with somewhere around 50, 60,000, that would be quite good. So I would also want to tell you guys one more thing. So I will tell you how the psychology got affected for me from past couple of months, and later how we started bouncing back. So I'm going to share the complete journey. So just give me 5 minutes, I'll be back and I'll share you the whole story of how the psychology affected us and we didn't make profit for 4 continuous months. So there was absolutely no profits. We actually had a 20 lakh loss for 4 continuous months, and now we have started to recover, and in the last 45 days alone we have made a profit of around 40 lakh. So I'm around 35 lakh. So I'm just going to share this entire journey of how we went from there to here. I will be just back in 5 minutes, guys. And thank you all for the super chats, first of all. And if you have liked this video stream, then please do hit the like button and also share this with your friends also. So thank you so much for joining. And I'll just be back in 5-10 minutes. Thank you all for the super chats. Guys, sorry, like I had to take the second entry. So this is the leg which we are going to enter again. So 1250 quantity. So I'll quickly enter. So I had just gone down for a second and the stop loss is triggered. So as I had told you, will be, so you can see again here, I had told you something saying that whenever the stop loss usually gets triggered, generally we'll be in loss. Very rare cases have been, we have ever been in profits. So whenever the stop loss gets triggered, so generally we will always be in a loss. So Krishna sir also, thank you so much for the super chat. Okay, so now since we have entered this, we are going to place a stop loss also. So one, we are going to bring the stop loss down. So we will see when we go to the order book, on the call leg, we have a stop loss of 236. So this 236, we have to get it down to 196, 40 points lesser back to the cost. So I hope you guys are getting what exactly we are doing. So we had discussed this system again. So the idea was once the stop loss gets triggered, so the stop loss got triggered, we are going to add the remaining 50% of the quantity, because whenever the stop loss is triggered, generally we will be in a loss. So the stop loss got triggered and we added the remaining 50% of the quantity. And so now we have to get back all the quantity stop loss to cost. So this leg, we have 2500 quantity overall open. So we have to get that back to cost, which is 196, because you can see that we have placed the stop loss at 236. This we will have to get down to 196. So we'll quickly do that. So now if the market actually bounces back, then we are going to go to a loss. So as I had already mentioned, generally whenever the market actually ends up going, usually when it ends up going up or down and stop loss triggers on one side, we will always be in a loss. Very rare cases, we would be in profits. So I hope this is clear, guys. In case if you haven't followed it, so morning we have discussed the entire system, what exactly we are going to do when. So you can see that we just now came back and recovered the loss. So I'll just show you the order book also once. So you can see we have this leg which is in the morning. The stop loss for this leg is still not triggered. So along with this, we have entered extra 1250 quantity for call leg and we have placed a stop loss to cost. So in case if you have any doubts, I would request you to go back to the video and take a look. So we have discussed this completely about the system, what exactly we are doing. So right now we have a loss of 9,000 rupees. So the worst case loss or the maximum loss what we are going to face is going to be 3 lakh. So the moment we are going, anyways, we don't have to do anything. So there's no way we are going to cross a loss of 3 lakh. So the moment we near 3 lakh, we can also exit the trade. Yes, we do plan the schedule of trades, so that is what exactly we had discussed some time back as well. Yes, you will be able to use the same margin again also. So if you want to take any positions, you will be able to use the same margin. So it looks as though we'll be hitting the other side stop loss also now. So you'll just take a look. So the other side stop loss has also been triggered. So that means we will have to add further 1250 quantity right over here. 1250. So I am just adding this, and we will bring all the stop loss now back to cost. So this also I'll exit, and I am going to get this down to 203. So another 2500 quantity we are going to place at 203. So one thing you have to note here is I don't know if I will be ending the day today in profit or loss. Two stop losses are triggered. So if another two more hit, I will be going to a loss for sure. So, but one thing for sure what I know is that the maximum loss what I'm going to face today is not going to exceed 3 lakh. So this is why I tell it is always important to plan your trade prior as to how much you want to lose, so that you always limit your loss to that extent. So in case if the market seems to take support at the lower level and bounce back, we will also end up adjusting some trades. But I don't think that is required, because we have discussed a simple system and we can just stick on to the system without much of a worry. So I hope this trade is clear. So I want you guys to use the chat box to tell me whether you understood what exactly we did or not, because that is going to be quite important for us. So I won't be surprised in case if there is a bounce here, because usually that is what we are seeing from the markets also. Whenever there is a huge dip, immediately it is going to get bought back into, or whenever there is a huge buying, immediately it gets sold off into. So one thing we want is a one-sided move. One-sided move is when we get the highest profits. So after this, we do have certain questions regarding the monthly iron condor adjustment, and I also told that I'll be telling a story about how we managed our psychology and how it had got completely messed up. So we'll discuss all about that now. So before that, I just want to make sure that you guys have understood what exactly has been done here, and next we'll continue with the other things. So now, as you can see, we literally have a naked leg open of 5000 quantity call short. So in case if we have a bounce back from here, this entire thing is going to go for a loss of around 2 lakh. And otherwise, let's say there is no bounce and the market continues to slide and we come around 17100, then that is going to be a pretty positive news for us. So we are going to come to pretty good profits as well. Okay, anyways, as expected, the market took support and bounced back. So this is nothing new. This is more on the expected lines itself, because today we weren't even expecting a huge volatility or huge one-way move in the market, because the global cues were more or less flat. So we didn't see any big move from the global cues. So let's just go back to the story. Anyways, all the stop losses are placed. In case if anything gets hit, it will just get triggered, and we are going to have a loss of around 1.5 to 2 lakh, because only 2 entries have been made. So when we do the entire 3 entries, so that time, let's say even that triggers the stop loss, that time our max loss is going to be around 3 lakh. So now I'll go back to the story. So most likely we'll get hit on all four sides because I was personally expecting a bounce back up. So I'll just go to the reports here and let me just show you some things. So when you actually come to reports and when I show you the P&L report, first I will be showing you the P&L report for the entire year, right? So from April 1st, 2021 to 25th March 2022. So first we'll take a look at the report for the entire year. So while that loads, we'll just take a look at the markets. Okay, it is taking quite some time to load. Let me just refresh this and check once. It's taking quite some time to load. Okay, so you can see here this particular year. So with options and futures, we have made a total profit of around 1.1 crores. So this is not big. This is somewhere around. If you remove 1.1 crores, we started off with 3.5. So now we have around 4.5. So this is going to add up to somewhere close to around 30% overall returns for this year with options. So with simple strategy itself, we have made 30% a year. So in this 1.1 crore, right, what you see over here, I'm going to tell you one more thing. So I'll show you from October 1st to Jan end. So this is 4 months, October entire month, November entire month, December entire month, January entire month, 4 months. So I'm going to show you the overall P&L. So you can see net we are at a loss of 20 lakh in these 4 months. So that means technically we have made this entire 1 crore profit just in first 7 months, and next literally 4 months we are at a loss of net 20 lakh. So guys, this stream is being done at HD, so you can definitely change the video quality from your settings. So we'll just keep looking at the markets meanwhile. So the market is bouncing back again. So the thing is, at this point, the psychology was very badly messed up because October you haven't done anything, November, like December, January. Imagine 120 days you don't end up making a profit. Overall year is it has gone pretty well. That is absolutely fine. But imagine 120 days, which is almost more than a quarter, you actually end up with a loss of 20 lakh. So that is quite messed up, to be honest, because in your head you will be thinking, okay, what exactly are you doing? Like, why exactly is this not working? So I was totally, so I think I had also made a video on this where I told that like I myself I am not making profits. I don't think it's right for me to tell you guys what to do, because when I myself don't make profit, how fair is it for me to ask you guys to take some trades? So that's the reason. Then what happened is my friend is a psychologist. So I went to her. And told, look, from past 4 months, I haven't made profit. So I know that I will be, like, I'm a good trader. I can trade well, but somehow I'm not able to get into that mindset. So I don't have enough confidence now. So I feel that, okay, like something is going wrong. I have to change something, but I don't know what. So then anyways, I'm going to come out with this, uh, and come out with this entire story later on. So then, I slowly started working on my psychology to improve my trades. So once you're in a loss, it's more like about, okay, I have to somehow get out of this loss and later start to recover and later do something. So then I was like, okay, doesn't matter. You have wasted 4 months. You waste next 2 months. So you're still going to have pretty good profits. You're still going to have more than 80, 90 lakh of profit. So there is no need to pressure yourself. Just take the time out. So then I exited all the future positions, everything, whatever I had, everything I was out except for the equity positions. So even now I don't have any future positions. I haven't taken any futures. So everything I was out of it completely. And I was like, okay, let me take a fresh start. So there is no pressure of recovering the old loss. So there is no pressure for making profits. Let me start like a new beginning. Let's see what is the best I can achieve. So from there, from 1st of February, so I had taken last 3 days in January as a break. So from 1st of February, I again started trading. So here, after this, slowly, as I started to make small profits, my psychology started to improve. So you can see, I have put from 1st of February till 31st of March. So let the reports load over here. So you can see, okay, this is 2022 is what I was. So you can see in the last 1.5 months alone, we have made a overall profit of 27 lakh. So Vikram sir, thank you so much for the super chat. So so this is how you can see that the entire loss what I had for the first 4 months was recovered in just 1.5 months. All you want is a good psychology to trade. So from October, November, December, January, you have an overall loss of 18, 19 lakh. And just in 1.5 months, you're out of all the losses and you're with a profit of 27 lakh. So this is where your trading psychology or your mindset matters so much. So once you're out of your proper mindset, it is going to be really messed up because you won't be able to trade well. So that's why first knowing what exactly you want to achieve and also knowing uh, how much are you willing to risk to achieve this, because what happens is once you go or take a loss beyond a point, it is going to affect your psychology so much. You'll be like, okay, I need to somehow get these losses back, somehow I need to recover this loss. I have already wasted almost 2-3 months of time. I have not earned a single penny, so I have to do something. So that is not required. It is absolutely okay to take it easy. So once you are in the right set of mind, you will definitely be able to do a fantastic job. So once your mindset is shaken, it is going to be pretty hard for you to get back into the proper zone. So I gave the futures at one of the lowest points possible. So I exited Nifty at 16,800. We were long on Nifty futures. I exited some great stocks, Infosys and all. I exited at 1,680. It is fine. So today I would have recovered everything with futures only. Maybe I could have recovered 17, 18 lakh. But at that time, every day, let's say I'm making profit in options, futures is giving me a loss. When I'm making profit in futures, options is giving me a loss. My MTM is not really shooting up at all. So uh, like that's why it was by that time, back in that time, it was absolutely okay to exit all your positions and start new. So it worked out pretty well. So you can see that right over here. So this is one story which I wanted to share with you guys, and I also hope that you like the story and you have liked the story and it also helps you out in your trading journey. So the market now is more or less trading around this range itself. So let's see what happens. If it continues here, we are going to get some good profits, and if not, we are going to have to take some loss. Hi Bharadwaj sir, thank you so much for the super chat. So you can definitely drop a mail to contact@optionables.in and we'll get in touch. So one more thing is equities have done pretty well for us. I will show you from the beginning. So most of our capital, so you can quite easily say we were able to more or less double our capital because of the equity gains. We were able to purchase some brilliant equity shares at some of the lowest prices possible. So when I go to P&L report and when I go actually show you equity from say 2020. So I'll show you what is the total equity gains we have. So like initially from the time we entered, the total gain from equities has been somewhere around 86 lakh. At the peak when Nifty was around 18,000, we had around 1.4 crores from equities alone. So that has turned out to be pretty well for us. So that's the reason. That's the reason. Like our capital also grew initially, and later option trading has also gone pretty well for us. So in this, we traded from April itself. Before this, we were trading in company account in Goodwill. So Goodwill we used to trade because they used to give us 20x leverage, and also we used to trade in Goodwill because we had 1 rupee per lot. But once the 20x leverage went, so there was no more there was no advantage of trading in Goodwill anymore. So that's the reason we shifted everything back to FIRSTOCK. So you can see the market is bouncing back up and we are also slowly getting hit. So I'll just leave it at this. And anyways, we know what is going to be our max loss. And I have a strong feeling that the market is going to come back to 17,200 and we are going to take a two-side stop. So in spite of that, I'm not doing any adjustment for the reason being I just want to keep this trade simple. It is okay even if I lose. So let's say you can see that this is the level of 200 and I am strongly expecting Nifty to come back to this level. So let's see, let's hope that Nifty doesn't come here but rather ends up coming here. So that is when we actually will end up making some good profits. Thank you guys, and I will be joining you back around 12:40. Thank you so much. Hi guys, sorry for the delay. I hope it's audible, so you're able to hear. So as expected, the market bounced back, and we are also at a loss. So I won't be adjusting the position from here. So let's just wait till the end and see. In case if it's required, we can just take the loss for today. That's absolutely fine. So I hope the audio is clear and you're able to hear. So if yes, so I'll just continue with the questions, as well as I had to also show the portfolio. Is the audio clear? Are you guys able to hear? Right. So, uh, yeah, like as we thought, the market bounced back. Even I had a strong feeling that there's a bounce, so there's going to be a bounce. But I just didn't end up taking any adjusting positions. The main reason for this was because we had to keep the trade simple. So now we'll just wait till the end. In case by chance, if we are lucky, we are going to end with profits today if the market starts to come down. Otherwise, we are going to take a loss. So maybe we can just tweak with our 130 entry slightly, maybe by shorting a little higher P, maybe around 17200 or so if required. So we'll just see about that as we come towards 130. Now we'll just hold on to the existing positions. In case if it stops out, we'll just take the hit. So we'll now quickly start with the discussion where we had left off with. One is regarding so we had one question from Krishna sir. When we carry Bank Nifty position weekend on Monday, we don't get much of a decay as we calculate up. Okay, the thing is, sir, what usually happens is the theta decay, whatever we calculate, is based on the Black-Scholes model value. So the Black-Scholes model is going to assume that, let's say, I'll just give you an example so you get a better understanding. So the Black-Scholes model is not going to think much. So it is going to have a very simple assumption saying that, okay, the IV is so much, the delta is so much, so the theta can be x. So it has a very simple idea, Black-Scholes. So it thinks that, let's say there is 2 days, let's say today is Friday, Monday, Tuesday, Wednesday, and Thursday. So it is just going to think, okay, so today is Friday. So based on the current input values, it is going to assume, okay, by Monday there is going to be X amount of decay. By Tuesday there is going to be X plus 2 amount of decay, and so on. So it is just going to assume a flat number. But what you should also note is that this can definitely change. So what do I mean by this can definitely change? So tomorrow, let's say there is a huge gap down. So that time, the IV what the option is considering, let's say is 30, but the IV jumps to 35. So in such cases, the option premium won't decay. So I will just show you one example, one live example itself. So here, when I actually come to the option chain, so let me just clear all these trades. So I will just come here and let's say I end up shorting 36,000 short straddle or 35,500 short straddle. So now I'll show you one thing. Let's say I make this Monday, right? So this is going to, okay, Sunday there is no this thing. Let's say I make it Monday. Okay, this is showing me that I'm going to get 8,000 rupees profit by Monday. So if the market ends up staying here, I'm going to get a profit of 8,000 rupees. But I'll show you something. So this has by default assumed that the IV is going to stay at 31. So tomorrow, let's assume there is a huge gap up or a gap down, or there's some big news based event and the IV jumps to 37. So now you see that from 8,000, your profit has dipped all the way to 4,000 rupees. So let's say, see this on a Monday morning, which is 9:30. So you can see it has dipped all the way to 3,000 rupees. So similarly, let's say there's a huge gap up or a gap down and the market actually ends up moving to 35 100. So there is now no, like the thing is, as the market starts moving against you, so now there is no benefit for you because whatever you get from theta is now being eaten by delta. So you can see again your profit has further fallen down to 2,000 rupees. Let's say there is a 2% gap down where markets open at 34,800. So at this time you would have already entered a loss. So the idea is, one, your IV is shooting up quite a lot. So these are your option prices, and once your IV shoots up, so if the same thing, let's say IV crashes tomorrow and comes to 25, so you are going to have a 8,000 rupees profit in spite of markets gapping down by 2%. So this is one thing that you should definitely make a note of. So sometimes Black-Scholes or all these option softwares are going to assume that the IV is going to stay constant because the Black-Scholes also assumes that the IV is going to stay constant. But that is not the case, and hence your option premium sometimes might not even decay. So I hope this part is clear. And next, coming to the portfolio, which I had to show. So let me just go back to Chrome. So here I'll just go to portfolio and you will be able to see the full portfolio. So you can see how many quantities of each shares we have. So the top holding here is, let me just see. Okay, I'll have to go to details itself. So you can see the top holding what we have is Infosys. After Infosys comes TCS, then Nestle, Pidilite, Kotak Mahindra, and Reliance. So these are our top 5 holdings. So in this itself, we have invested almost close to 2 crores. So out of the total 4 crore portfolio, so top 5 stocks have around 2 crores invested. So this is the portfolio. So I'll just send a copy of this as well, maybe upload it later on in today's video. In case if you want, you can definitely take a look at the full portfolio. So we'll just take a look at the markets. Luckily, it has slowly started to come down, which is a good thing for us because we are going to get some decay and recover our losses. So one thing is what we are looking now is we are seeing a lot of overnight decay and also the decay happening towards the end of the day. So because I have observed this quite some time now that like throughout the morning, even though the market doesn't move, you're not seeing a lot of decay happen. So I don't know the specific reason for that though, but you're not seeing that happen, and most of the decay comes mainly towards the end of the day. So in case if you guys have any questions, we'll be more than happy to address it. So you can start asking the questions in the chat section. And also, if you're liking the content, please don't forget to hit the like button. It will just take a couple of seconds. This this will help the YouTube algo to push this video to more number of people. So, and also you can share this with your friends also, so they can also join the live stream. Yes, you can definitely start with one lot of Nifty. So you can enter. It's always good to start with one lot, and later maybe go with more lots. So I will tell the story about the covered calls also, and yeah, I will tell you once what happened with the covered calls. And first, yeah, will discuss about the monthly iron condor adjustments. So we'll just take a simple iron condor and discuss this thing. So let's say I do a simple monthly iron condor. So I'll go to 28th of April, and I end up doing say 34,000 short and 37,000 short, maybe 37,500 short. Okay, this is 700, so let's go with 37,000. And we'll hedge it with 1,000 points away, 38,000 and 33,000. So now we have a very simple iron condor with us. So such that you are going to have either 13,000 rupees profit or 11,000 is your max loss. So whenever you have such an iron condor, so first thing what you have to make a note of is to determine what is your maximum loss. So you know that your maximum loss is 11,000 rupees. So let me just open PPT. So now you know that your maximum loss is 11,000 rupees per lot. So how much is this in terms of points? So in terms of points, 11,000 is going to be somewhere around 400 points. So that means you have to remember that the moment you actually end up collecting 400 additional points, you're not going to go to loss in any stage. So always just focus on this. So just determine how much is your maximum loss per in terms of points. So per lot in terms of points. So first try to determine that how much is going to be your maximum loss. Once you know what is your maximum loss, so next you have to try to identify how exactly are you going to cover this 400 points. So you can cover this in multiple ways. So you can either short additional call options, you can shift the entire strangle, you can shift or you can average the entire strangle. So there are three common, like even though there are multiple ways, there are three most common ways on how you can adjust this particular position. So now we will discuss each of the way. So one thing what you have to remember is you have to get back this 400 points. And so let me just tell you once again. So the thing is, you have a max loss of 400 points and you have a break even of 33,500 and 37,500. So 33,500 and 37,500 with max loss of 400 points. So what you have to focus on here is, anyways, you know, it is a limited risk strategy. So you don't have a lot of risk. Even if you let it overnight, you're just going to lose 11,000 rupees. So in such cases, what you usually end up doing is pretty simple. So you can either, one, extend this range, or you can collect the additional 400 points cover. So I will again repeat, you can either extend this range, or you can cover your 400 points. Both the ways you won't be going under a loss. So now let's look at the scenarios, and I will also show you simple adjustments what you can do in such scenarios. Right, so let's go back to Sensibull. So first we will talk about extending the range. So let's say now the market slowly starts to come down. So as the market starts to come down, it comes towards your break even of 33,500. So in case if the market comes towards 33,500, there you can end up creating one more short strangle. So you can either create a short straddle, or you can also create a short strangle. So let's say it comes towards 33,500. At that point, I will create a fresh iron condor, maybe at 32,500, and hedge it with 1,000 points away, or maybe a fresh short straddle. So here we will have to change the prices slightly. So I'll just take a look at the markets, what is happening. So it's coming down slowly, and we are also recovering our losses slowly. So here this won't be at 2000. Let's say this is at 1000. And these two might be at 700. So the thing is, you can see, okay, here, okay guys, I won't be exactly able to show you this. The reason being, the premiums are something which we will have to extrapolate and guess this might have been the premium. But what I can rather do is show you on simulator. So here let's take a month where the market was extremely volatile on one side, and we will discuss about that month. So we will take this month for example. Let's take the month of November, when there was a huge fall in the market. So you should always remember, if there's a big V-shaped move, then you are going to get hit. So there is nothing which can actually stop you from getting hit. So maybe we can take this. The thing is, if there's a big V-shaped move and you adjust, that means you're definitely going to get hit. If you don't adjust, you're definitely going to make some profits also. So now look at this. We can either take this or this. We'll take both, and we'll try to see how we could have adjusted. First, we'll go to 1st of November. Meanwhile, we'll just take a quick look at the positions. So even though the market is falling, the PEC leg is not losing its premium so much. So that's the reason, even though it has come down quite a lot, it is still trading at 166. So I'll just show this to you here. So we are in 1st of November, and I'm going to go to 25th of November, and we are going to go to Bank Nifty. So let's say here you ended up creating a iron condor, let's say at 38,500, and you hedge this with 37,500 or 38,000, and you go 4,500 and 41,000. So your iron condor is going to look similar to this. So in the worst case, you are going to have a loss of 6,000. In the best case, you are going to have a profit of 6,000. So now, let's say the market starts to move in one direction. Let's skip day by day, and let's say the market starts to go in one direction. So here, the market has actually breached your break even and gone quite below. So here you can see your max loss is, you have pretty well breached your break even. Would you want to keep your break even as? So let's say you don't expect the markets to go below 40,000. So we'll also do adjustments for that. So this is going to take your break even quite low. So let's go to 40,000. And let's say you end up shorting 2 lots at 40,000. So you can see here what you have more or less done. Your break even now is coming at 40,000, but you have also made one more thing. On the downside, you have limited your risk to 4,900 from 6,300. So you have already reduced your loss quite a bit. So let's skip one more day. So the market falls further down and you are at 3,900 now. So at this point, let's say you believe, okay, the market has fallen so much further to 37,300. Now I am not expecting the market to come back above 39,000. So always make sure there's only 3 more days to expiry, so you don't have a lot of things to play around with. So you can easily short this at 39,000, maybe 2 lots. If you're not expecting it to go above 39,000, you can short this 2 lots. So now you can see that you have a lot of loss on the downside, but before you hit your loss here, you have to first recover and come back here, which is going to definitely take time. So now let's go further one more day. The market has further fallen to 37,200. So now the market is almost around, so this is a Tuesday and the market now is almost around, how much is it, 1,800 points away from the break even. So in case if you want, you can again end up shorting 38,000 if you are expecting the market not to come above 38,000 in the remaining 2 days only. So in the remaining 2 days, if you don't expect the market to come above 38,000, you can end up shorting 2 lots. So you can see the break even now has come down. Okay, there is some issue with this. So let's just see what happened. Let me just remove this. So this is the current situation. So all we are trying to do is collect some additional credits. I don't know, there must be something wrong with the simulator. When I try to short 38,000, these two are going away. So I exactly don't know why. There's 0 max profit. Okay, that means we are not at in profits. Let me just. Okay, the thing is, here you will definitely be in loss only, guys. But the thing is, you won't be in profits. That's why. So there was nothing wrong with the simulator. You won't be in profits. But the thing what you have to note here is, in case if the market doesn't come above 38,000, then you're going to have a loss of only 1,300 rupees. So before, what was your loss? You had a loss of somewhere close to. Okay, the market here is also bouncing back. So before you had a loss of somewhere close to 6,000 rupees, but that you are now able to reduce to only 1,200 rupees. So let's just go one more day ahead and one more day ahead. So you can see overall you have reduced your loss from 6000 to 1300. So this is one way of collecting additional credits. So now I'll show you one more way of how you can actually end up adjusting this particular position. So the thing is, I would tell you one more thing. Adjusting monthly is very difficult because you won't be able to predict what will happen to the market after maybe 3 or 4 days. So today one trend is happening, so this trend can continue maybe for the next 3 4 days, and the trend is going to change. The trend might continue, the trend is going to change. So for this reason being, it becomes very hard to adjust a monthly iron condor, because now you might end up adjusting, but within some time the market might completely reverse and you might completely end up wasting your adjustment. So the best example for that is this month. You can see this particular month. How exactly will you end up adjusting this trade? Because look at this. Okay, this went to almost 32,000 in this particular month, and it has now also made a high of 37,000, and it is trading at 35,400. So how exactly are you going to adjust this position? It's almost impossible, because when the market is at 32,000, you won't sit ideal without doing any adjustment. It is very hard to sit ideal without doing any adjustment. Or similarly, if the market, let's say you enter at 33,000 and the market goes to 37,500, it is not possible to sit without doing any adjustment. So that's the reason it is not so easy to have a mindset of not to adjust. So that's the reason monthly is a little hard thing to do, because you won't be able to predict what will happen to the markets. The easier one is week, because today if the market is bearish, I can also expect the bearishness to continue for tomorrow also, but I can't expect the same bearishness to continue after a week. So that's the reason it's always good that you have, like, you play with, you do the adjustments as you come towards the end, and you don't end up doing the adjustment right in the beginning. So these are the small bounces which is actually making intraday traders have a tough time. So you can see that these two were sudden green candles which almost covered around 40 points, and now there is a big red candle which falls around 25 points. So these are the candles which are really hard to trade, because as a trader, as an intraday trader, there are chances that you will end up adjusting if you have gone for a simple short straddle. So you can look at Bank Nifty. So from here, from the low, it has almost bounced back around 130 points just in matter of 10 minutes. So these are pretty violent moves, and these are going to give you a very hard time adjusting. So now since I hope you are clear with one adjustment. So this is called as, you can call it in any term. So this is where you just collect some additional credits, and the only risk is that you are going to end up losing a lot if the market reverses. So I'll show you one more type of adjustment to reduce your loss. So this is one kind of adjustment. So let's delete everything and go back, and I'll show you this adjustment called as average. So here I will again come back to 1st of November. So here let's say again we end up doing the same short triangle. So I have done the same thing here. We have 6,000 and 6,000 profit, 6,000 loss. So we have more or less done the same thing. So now I will show you what is the other way you can adjust. So you have to note one thing. The major point of adjusting is to bring down your losses. So let's see what are the different ways you can adjust. One is where we saw we took some additional credits. So I'll show you one more way now. So as we move towards the break even, So here you can see that we have quite clearly crossed our break even. So this adjustment is known as an average. So what you are going to do is you are going to make this a center point. So this point is currently 38,500. So if you want to make 38,500 as your center, then you are going to go and short maybe 38,000 calls and puts. And you are going to purchase some hedge. Okay, I didn't actually make this a center. I ended up making it a corner. So I didn't choose the right strikes then. So directional, non-directional, which is the best? It is completely dependent on the situation. So you can't give one answer what exactly is the best. So here, did I press it 2 times? So as you can see, this is one more kind of adjustment, which is average. I didn't do the proper averaging here. So this point, what you have shorted, should technically become the center. So I haven't done the average properly, but I just wanted to give you an idea. So you can see what you have basically done. You have extended your break even. So before taking this trade, so let's see where you had your break evens. Okay, I by mistake ended up clearing everything. So before taking this trade, you had your break even at 38,500, but after this trade, you ended up reducing your break evens to 37,200. So you can see how you can basically either push your break evens backwards, or the other option what you have is to take some additional credits so that you end up covering your losses. So these two are the major ways how you can end up adjusting your trade. So it was not completely clear in this. Maybe I will make a video on properly on how to adjust your trades pretty well. So I couldn't completely explain because even I would need some time to figure out what would give us the better adjustment. So once I know that, I will be able to help you out in better way. So now we'll just take a look at the options, what is happening. So again the market bounced back, and again we are at a loss of 50,000. So most probably I'm expecting we'll be ending the day today with a loss, maybe around 1.5-2 lakh if there is a bounce back. So I am expecting a bounce back. If it happens, then we are ending a day with a loss, and in case if not, we'll be having a pretty good day. So I'll tell you one story with the covered call as well. So what happened is there was a friend of mine who was doing covered call with Infosys. So the thing is, he was doing covered call with Infosys when Infosys was trading around 600-700 level, right? So he was doing this month over month over month, where every month he used to collect around 10 rupees, 5 rupees. So he was pretty happy with this because Infosys during that time was not really performing well, and he was collecting 5 rupees, 10 rupees, and he was very happy. He was like, look, my average price is coming down, and so on. So he did this for quite some time, and he maybe over course of 1 year, 1.5 years, he ended up collecting a total premium of 60-70 rupees. So he was very happy, thinking that okay, my average price has now come down by 60 rupees. So average price of my short position, sorry, Infosys equity position has come down by 60 rupees. But later what happened? He had again shorted for the next month also. So this month, Infosys results came. And when Infosys results came, Infosys shot up by almost around 13%, 1 3. And that month alone, Infosys went from almost 600 to 900 rupees. So 650 and odd to 900 rupees. So how much did he really save throughout the entire 1 year? He would have max saved around 60-70 rupees with covered call. So it only took one single month for him to have an opportunity cost of somewhere close to 200 rupees. So technically, he ended up losing around 130 rupees because he ended up doing the covered call. So I'm not telling covered call is bad, but in the long run, it might not work out the way people think. Because one good day where the market starts to shoot up, that covered call is going to eat up all of your opportunity cost and you won't be able to get it back again. So tomorrow he won't be able to get his Infosys back again at 500 rupees. So he missed out most of the rally from 650 rupees around to 900 rupees because he had that one covered call leg. If he didn't have that, then it was a different story. So he would have maybe lost around 70 rupees throughout, but along with that, that 70 rupees what he got from covered call, he might have lost that, but he would have gained this entire 250 260 rupees. So that is why like sometimes I personally don't prefer covered call for the same reason. You don't know when good things are going to happen, when the market is going to shoot up. So anyways, you are not going to lose more money than what you have put, and especially when you talk about stocks like Infosys, HDFC Bank. So these are absolutely nothing to worry or nothing to fear. So these are top notch stocks. So I don't even find a reason why I should be trying to get some 5 points, save some 5-10 points, when in the larger scale, when you look at it, this 5-10 points what you're going to save today is going to be eaten up with one good month. So this is one story which I wanted to share. So we have one more entry to take at 1:30. So I'll just take a 5-minute break. We'll take the entry and then we'll go for the lunch, and then again we'll be joining by 2. So I'll just come in a couple of minutes, uh, another 2 to 3 minutes. We'll take a short break, come back, and we'll take one more entry at 1:30. So 1:30 sharp, we'll be joining and we'll be taking one more entry. Hi guys, welcome back. So we'll quickly take the fresh entry now, and post which we'll also take a small break for lunch. And I will before that I would want to show you one thing which is very important, and that is we were just discussing about the covered call right over here. So you always remember covered call is more like a naked put option short. So when you actually look at the equation of covered call, it is going to be like a naked put option short. So before which I want to just confirm whether the audio is audible, whether are you able to hear or not. So can anybody confirm whether it's audible or not? So I'll just show you this. Or maybe we'll first just enter the positions because we are almost at 1:30. So the thing here is there are two things what can happen. Either the market can come down or bounce back. If you look at our current position, so technically now we should end up taking 17,150 short straddle. But if you look at the current position, you see that we have a lot of call options and we have zero put options, 5,000 quantity of call options and zero put options. So that's the reason instead of going for 17,150, I will be directly going to 17,200. So here you can see that again I'm making smaller tweaks. So the reason is I'll be going full quantity this time, and the reason is fairly simple. In case if there's a bounce back, we need some cover. We have absolutely no cover now and we are going to lose everything. So the idea is always just to see how you can minimize your loss. So that's the reason I will end up taking the full quantity, not the half quantity now. So because I have 5,000 quantity naked and it is not a good thing to keep so much naked. So we'll come to 31st of March. So now I'll be just taking this entry. Let me just explain once again what exactly we have done. So you can see the position right over here. So we have 17,200 naked 5,000 quantity. So that means for every point which it moves in our favor, we are going to get 500 rupees, sorry 5,000 rupees, or against our favor, we are going to lose 5,000 rupees. So now the risk what we have is what if the market actually ends up going up. So that time we are definitely going to lose some money. So to prevent that, so to have some excess protection because we don't have any PE, so I am not going to do any adjustments directly. So directly I'm not doing any adjustments. Rather, I will end up shorting 17,200 PE full quantity. So technically here at this point I had to short only 17,150 PE and CE, 17,150 short straddle with 1,250 quantity, but I have ended up shorting full quantity of 17,200 short straddle. So again I'm going to place the same 40 point stop loss. So let's just see at what levels they were at 130. So I am doing small modifications here. So you should always try to know what is the idea, what exactly is going on. So you can see that this actually turned out for us quite well. So the thing here is, in case if I hadn't had this additional shot, then we would have definitely gone for a huge loss now, because we would have had around 7,500 quantity CE shot. So the idea here was very fairly simple, that we already have so much CE. We already have 5,000 quantity of CE. Now I am not concerned about market falling. If the market falls, I am anyways going to get the profits irrespective of uh, like irrespective of where it falls. But my only concern is what if the market bounces back. At this point, I don't want to end up losing much. So I want to try to limit my loss as much as possible. So I can now for surely say, in case if everything gets stop loss triggered, I am not going to still lose more than 3 lakh. So no matter where the market goes, no matter what stop loss gets triggered, I am not going to lose more than 3 lakh here. So let's just end up putting a simple stop loss of 40 points for both the legs. So I'll just come to 17,200. So when I come here to 17,200 and so this is at 208, so 208.75. So we'll place a 40 point stop loss to 208.75, which is going to be 248.75. So we'll just place the stop loss 248.75 for your PE leg. So you guys can tell me the stop loss for C leg. I'll just show you the opening price. So you guys can tell me what is going to be the stop loss for the PE leg. So C leg. So the opening price of C is 165. So what do you think is going to be the stop loss for 165? So we are placing a 40 point stop loss. So the time now is 1:35, but you can see that we are looking at the chart at 1:30. So we are looking at 1:30 chart. So we are going to place a stop loss at 205. In case if the market falls, we are going to lose some money. So we are going to lose out on some money, but that is okay. It is okay because if the market bounces back, we are going to save some money as well. So that's the reason. So we have taken the full entry. All the stop losses are set. So if the market continues to stay below 17,130 for some time, then we will definitely end today in positive. So we want the market to stay below 130. So we don't know if that will happen or not. We will have to wait till the end and see. So if the market starts bouncing back, then one stop loss is going to get triggered. So let's see how exactly it is going to go and whether we are going to end today with profit or loss. So before we take a small break for lunch, I would want to finish telling you about one more concept which we were discussing about the covered call. So I would want to tell you, your covered call is nothing but a naked put option short. So let me just show you HDFC Bank. So if I short 1450 put option, look at the payoff graph. So this is your 1450 put option short. So look at your payoff graph, right? So your max profit is 17,900. Instead of this, let's say I end up shorting a call option and I end up purchasing a future. So you can see you again achieve the same payoff with the same break even, which means if you end up doing a covered call, you are more or less technically just end up you have technically just ended up shorting a naked put. So what is the issue with shorting a naked put? You are going to have unlimited loss and limited profit. So forget about saving your few 10 rupees, 5 rupees pennies. So focus on this. In the worst case scenario, your loss is not covered. You're still going to have an unlimited loss. In the best case scenario, you're just going to end up with a limited profit. So that's the reason covered call is not always advisable. So it is going to give you small returns once in a while, but it is going to take away huge returns at once. So Nifty right now is again at 34, and I will just leave the screen open. So we'll quickly have a small lunch break and we'll be back by 2 o'clock. So I'll just leave the screen open, and only thing what we are hoping, since we have so many call legs, in case if the market ends around 17,120, it is going to be pretty good for us. We can expect this leg to decay around 150 and this leg maybe to around 220 max. So that is going to be a pretty good thing. So let's see how exactly it goes. Even if we are able to end with say around 75-80,000, it is a good positive for us. Mm. Since the market is falling, it's a positive for us. So I'll just take a quick lunch break. I'll leave the screen as it is. So let's come back around 2 o'clock and see whether we are in a profit or loss. So I want look at the screen now because we have set the stop loss properly, and we know that in the worst case max loss is always going to be around 3 lakh. So that's the reason there is no need to keep looking at the markets over and over again. So it is just going to give you extra headache. The reason being, whenever you keep looking at the markets, you end up taking some positions which you otherwise wouldn't have. So I'm going to leave it at this. So let's see what exactly happens, and we'll be joining you soon. Thank you guys. Hi guys, welcome back to the video. I wish it is audible. So luckily right now the market is going in the favor of how we want it. So can anybody confirm if it's audible? So one thing what we don't want from here is a big bounce back. So if the market is like this, it is going to be quite good. So if as I had already told before we went for a break, if the market ends up consolidating around 17,100, 120 levels, then that is going to be quite good. So we could easily expect more than 50k, but we have already got around 50k by now. So even if there's a small bounce back, that should be intact. So we won't be getting a huge decay until now. So now it's more or less like a delta play, because long gone, now there is no theta, because we have huge quantities of call option compared to put option. So the more the market falls, it is going to help us quite a lot. So let's say the market comes towards 17,070, 80, then that is going to give us much more boost than the market consolidating here itself. So in the best case, we can end up around 1 lakh, 1.2 lakh if the market consolidates and moves down slightly. If there is a bounce back over to, may say, something around 17,150, then we will be having a small loss. So maybe around 10, 20,000 loss. So let's see how exactly this goes. Now I am not going to keep any stop loss from here. So it's either going to end in profit or a loss. So we'll accept both. So we had taken this strategy at multiple time frames. So first we entered at 9:30, then 11:30, and then 1:30. So right now we have the following legs left, because what we entered at 11:30 as well as 9:30 has already triggered the stop loss. So which means we only have one more leg left. So we will hold it until around 325, and we'll just exit it. In Pine, we can actually try adjusting this position. So we will set some proper rules before we actually adjust. So if you actually look at this chart, so 17,150 does look like a strong resistance. If we see that market is taking out 17,150 decisively, only then we can actually end up taking some adjusting trades. So if you look at this with even shorter term, maybe we can take a small counter once market crosses 125, 17,125. Once that is breached and market closes above 17,125, that is this level, we will end up shorting a small put option. So I do consider closing the positions on Wednesday or a Tuesday. So I will tell you what happens. So this particular leg is there, right? So it still has 150 rupees left. So 150 rupees is a quite huge premium. It has a lot of room left for decaying. So on Wednesday, what happens? A 100 rupee option would have, let's say, come to around 30 rupees. So from 30 rupees, there is no lot of room for it to decay. So it might not even end up decaying at all, right? So, but if there's a small reversal, then this 30 rupee option can easily become 45 rupees, 50 rupees. But from 30 rupees, it is not going to become 10 rupees on the same day. So that's the reason in such cases, hardly, maybe you might miss out on say 5-10 points. That's absolutely fine. What you will be really avoiding is a huge bounce back through which you will end up losing quite a lot. uh, to be honest, want you to do is just take a payoff graph, look at both of them. Multi-level short straddle is absolutely nothing but a simple short triangle. I will show you a very simple example right over here. So let's go to Sensibull. I am personally expecting 17,000 to be held, but we don't know. So I will just show it right over here. So you can see when I do a short straddle, let's say 17,200 and or let's say 17,000 short straddle and 17,500 short straddle. So this is what is known as a multi-level short straddle, right? So you have done one short straddle at 17,000, one short straddle at 17,500. Remember the profit, remember the break evens, 16,818. So the market is now coming closer to this level. So we'll just have an eye here. So in case if adjustment is required, we can end up doing it, right? So here you can see this is nothing but the multi-level short straddle, and all I want you to do is I will open this side by side and I will show you one more thing. This is nothing but creating a simple short triangle naked. So you can just go short 2 lots and short 2 lots. So look at the break evens, 16,820 and this is 16,818, maybe 1 rupee that side, this side. So look at upside break even, 17,679, 17,681, 2 rupees higher, but it's absolutely no difference. Look at the probability of profit, 61%, probability of profit, 61%. So then also look at the funds required, 2.3 lakh, this is around 2.5 lakh. So look at the max profit, around 18,000, 18,100, 17,900. So now you guys can tell me which is better. To be honest, there is nothing called as this is better over this, because it's the same. So doing short straddle at multiple levels or simply doing a triangle is the same. But I will tell you why doing a simple short triangle is better than doing a multiple level short straddle. Because the only reason to that, let me first simply take a small adjusting trade to make sure our position doesn't get bad from here. So let's just go to 15. So this is trading at 73. I will just put an order for 2,500 quantity at 78 or even 80. So in case if you are coming, let's start with 1250. So this is a simple counter trade. So in case if the market actually ends up coming higher, let it get cleared. It is a simple counter trade. So meanwhile, as that happens, if we feel that the market is actually holding on to this levels and shooting above this levels, we'll quickly enter it. So I hope this answers your question. So next we'll look at some other questions over here. When the VIX keeps boosting, adjusting is very hard. So the thing is, option premiums don't decay, and it is very hard to do adjustments. And the stop loss what we have used for today is nothing but a very simple 40 point stop loss. It is not even based on percentage, it is a simple 40 point stop loss. And meanwhile guys, if you are liking the stream, we have totally got 883 likes, so you can take that up to 1000. If you haven't liked it, then do hit on the like button and quickly like the video. So it will help the YouTube algorithm to push this to more number of people, so more number of people can also join the stream. We actually don't expect a sideway move on any day as such. So I would like to tell you one thing. When you are placing a stop loss for a short straddle, your main profit, major profit, is going to come when the market actually ends up moving. Because hardly otherwise you will lose 20 points, 20 points. Let's say there is absolutely no stop loss being triggered, you will lose 20 points from here. Let's say you have done 150, sorry, let's say you have done this at 190 and 195. In the best case, this will be towards the end of the day maybe become 170, this will become 160. Best case, you will end up gaining around 30 to 35 points. But let this trigger the stop loss of 40 points. So this can even go up to 70, 50, 80 or so on. So as the even though the market is not sideways, it's okay to do a short straddle. Yeah, one-sided move, that is what we just now discussed, Santosh. So straddles we usually prefer because even if there's a one-sided move, it is going to benefit. Yeah, for Thursday also we are using the same 40 points from past 3 weeks. So that has worked out quite well. So we haven't changed it right now. So the market here is again trying to hold these levels. Only thing what we have to see if it is going to cross these levels and stay up. So down the screen views. So okay, so the market does look like it is holding, taking support at the lower levels. So one thing what we can do right now is take a very simple counter trade. So for that I'll just enter 2000 quantity this time. So we had put a order book, but doesn't seem so that it will get triggered. So that's the reason we will just enter this 1000 quantity at the market rate. So it got cleared at 68. So again we have 16800 and 17. So again there's a huge bounce back, and by this time we should have gone to a loss, but we have saved some amount by adjusting the trade right over here. So we have shorted this as well as we have shorted a little higher PE. So both of this have actually saved us quite some amount. So today by now I can quite definitely tell that we are not going to have a big day. We are not going to end more than 80-90k unless the market falls from here, which again looks pretty unlikely. So we might not end up having a big day today, but doesn't matter. It is fine as long as the market ends up trading here. So coming to the screen question, this is the only screen I use. I don't have any other screen apart from this. So P, I haven't kept a stop loss as of now. So the thing is, I will exit this P once it breaks today's low. So I haven't placed a 40 point stop loss. if it breaks today's low, we can see that there's a big strong green candle which has actually closed above. So we do find some more resistance coming around 50. So that's the reason. Like in case if we actually end up breaking this today's low, I'll exit the other PE. Difference between strangle and inverted strangle is again the same. There is absolutely no difference. Zero difference. Always do normal short strangle, because with inverted short strangle you're going to actually end up giving out lot of charges. So I don't know how some people say inverted short strangle is better than a normal short strangle. There is absolutely nothing like that. Both inverted short strangle or a normal short strangle are one and the same. So let's just take a look at it. So this is a normal short strangle. Just look at the break evens. This is a inverted short strangle. So look at the break even. Tell me 1 rupee difference between both. Do you see any difference between both? But I will tell you what is the difference. The difference is one in the margin. The difference is also in the trading charges you will end up paying. So there is absolutely no difference between an inverted short strangle and a short strangle. So when somebody tells you that inverted short strangle is easier to manage, better to adjust, all that is complete bullshit. So there is absolutely no difference between the two. So just take a look at the screen right over here. There is zero difference between both. So the break even is exactly the same. So as we move over 150, we will further do one more adjustment, because now we are just trying to save the losses. So we are not really trying to make any profit. So today's trade we might end up losing in case if the market ends up shooting up. If it doesn't shoot up, then good for all of us. Expiry day we still use the same setup. So apart from that, we also take some discretionary trades. So we mainly more or less end up using the same setup itself. There is no difference. Uh, to be honest, there is no source of knowledge as such. So one thing what I would recommend you to do is just put this and try to remember this payoff graph, remember the break evens, try different combinations, see what exactly are you getting. So you will understand yourself. So then you also see what is the IV over here. When you actually change it, see what is going to be the IV. So it is more or less the same thing. So just by putting and observing things, you will be able to crack it. So there's no other secret sauce to this. Bank Nifty short straddle stop loss, we don't have any particular level as such, because we were using the system where we used to use 30% stop loss, but we have stopped that because we saw a lot of drawdown because of the volatile market since the VIX was high. So right now we are using this Nifty system, so that is going quite well. So we should see how exactly it goes. I will tell you one more thing. So let me just show this to you. So everything works. So sorry for the spam. So let me just show you on stock mark. Sorry, I had gone to get some water. So one thing what I would like to show here is, let's say I just build a strategy. So call sell, put sell on Nifty, let's do. So I'm not going to change any parameter. So here I put a 40% stop loss. And here again I'm going to do a simple call sell, put sell on Nifty. Again I'm going to put, say, 60% stop loss. So let me tell you one thing, both of these strategies are going to give you profits. So both of them are going to give you pretty good profits itself. So it's a pretty simple thing what you saw we did right now. So all we did was we just ended up creating a simple short straddle. So you can see this particular thing gave you a profit of 1,59,000. This gave you profit of 1,51,000. So you can see there's no big difference between any of these two. Whether you use a 60% stop loss, 40% stop loss, whether you tweak something like maybe 40-point stop loss or 60-point stop loss, the results are going to be very close to each other. So that's the reason I tell you it is not about the strategy, it is about the execution of the strategy. So you might have the best strategy with you, but if you don't execute it well, you are not going to make profit. So the best example is what I showed you right now, right? So you are only going to make good profit once you can execute any of those strategies. It doesn't matter you keep 50, 40, 80, 20, it doesn't matter. You're still going to make a profit if you follow it well. The thing is, I wouldn't say it is a bad thing to utilize all the margin for a small account, because when you have, say, 5 lakh, you can only go maybe 2 lots. So 2 lots of short straddle or 3 lots of short straddle if you have around 3 lakh. So 2 lots is the maximum you can go. So for 2 lots, if you're going, you are more or less utilizing the entire margin itself. So you can't go lesser than that. So that's the reason there is no question of like utilizing the entire amount. So here we are not adjusting the naked PE, we are adjusting the naked call option. So we have 17,200, naked 7. Now we have little lesser because we have purchased the hedge. Sorry, I mean to say we have shorted additional put. So if the market consolidates here, then it is going to be pretty good for us. Expiry day, I will tell you why live trading is not possible. So we purposefully don't do it on expiry day because the markets will be quite volatile and we will have to follow the markets every now and then. So there is no time to sit and answer the questions or anything of that sort. So we'll have to continuously keep on following the markets. So at that time, you don't want distraction. So today is a more or less a chill day where the market is expected to not make a huge move, or even if it makes a huge move, the positions are something which you can manage because today is not the expiry day. But on the expiry day, that is going to be the last day for that particular contract, and you don't want lot of distractions while you're doing expiry. So I will also share some stories of how we have actually lost money. So the thing is, I will tell you one thing. The major lessons what you're going to learn is when you actually lose money. So you can definitely attribute most of the gains to the market itself, but you have to be responsible for each and every penny you end up losing. Because I'll tell you what exactly happens, because you were able to make profit because the market went in your favor. You made a loss because the market went against you. So now, when you're losing money, you can definitely try to avoid it in many ways. So if you haven't avoided a loss, right? So then it is your mistake. If it has gone in favor of your view and you got profit, then it's market's credit because the market went how you wanted. So you only focus on the loss aspect of the thing. So do not focus on the profit. Whether you get 1,000, 2,000, 3,000, profit is profit. Any positive number is a profit. But only focus on the loss aspect of things. So you are completely responsible for each and every penny of your loss. So market is going to give sometimes, take away sometimes. While it is taking away, how much you are willing to give back to the market is something which determines whether you're a good trader or not. So no matter what kind of a trader you're definitely going to make money today or tomorrow. There is no doubt about it. So while you're making money, and you're also definitely going to lose money today or tomorrow. So the thing is, how much are you going to lose on the day you are losing is what determines whether you will be profitable in the long run or not. Managing straddle in a low VIX environment is quite easy compared to high VIX. I will tell you why. You won't have so much volatility. In low VIX, if the market starts moving higher, it will usually continue to go higher, and you won't keep seeing big swings up and down. So that you will only be seeing in a high VIX environment like now. So I love to do ratio spreads during high VIX environment because most of the times with ratios, we have ended up making profit. Even during COVID crash, when the markets fell, so the VIX was extremely high and it was around 70, 80. And because of that, we were able to actually recover our losses. So we had lost quite heavily during the COVID period. And the only reason why we were able to recover the losses is due to the ratio spread. So that time the VIX was so much that I'll give you an example. So 500 points out of money option was trading at 500 rupees on an expiry day, and 1,000 point out of money option in Bank Nifty was trading somewhere around 330 or 320 rupees. So this was the kind of premiums what markets had on an expiry day is what I'm telling. So I'm not even talking about like Friday or a Tuesday. So this is where ratios had given us a huge edge before, but now obviously as the VIX comes down, ratios are no longer so profitable. So ratio spread we had just discussed today in the video itself, so maybe you can just go sometime back in the video and you will definitely find this video on ratio spread. Meanwhile guys, if you are liking this stream, so then please do hit the like button because we have uh, totally 986 likes and we are just away from 14 people to reach 1000. So if you haven't liked the video, then please, and if you're liking the content, then please do consider hitting the like button and make it reach 1000. So there are only few reasons why a stop loss might not get triggered if there's a sudden move in the market. So sudden that you have kept a difference of 5 points and the stop loss doesn't get triggered. So only then it is going to be a problem. Otherwise, 99% of the times you're not going to face the issue of hitting the stop loss. So thank you so much for the 1000 likes, and thank you all also for showing a constant support and staying through this live stream. With capital of 2 to 5 lakh, I think one lot should be sufficient because going more than that, you can definitely go more than that by just ending up by buying a hedge, but it is definitely not recommended. So I'll try doing on an expiry day, but I can't guarantee that because I usually want to sit alone and have a calm mind while trading for expiry. So in expiry, I'll be taking a lot of discretionary trades as well. So it won't just be simple system-based trades. So since there will be a lot of discretionary trades, I will have to keep my entire focus there also. US stocks, we would definitely invest. I don't know about trading, but definitely, given a chance, we would definitely invest in US stocks. So this video is going to be there on YouTube itself. So you can definitely come back and check it anytime. So we are going to stop this live stream by 3:25. So we are going to wrap up everything, book profits, and close the trade. And also, we have a very exciting announcement coming up tomorrow. So, tomorrow we'll also be announcing the results of the mentees for the mentorship program. So, totally, we have shortlisted around four. So, we had a list of around 1,800 people who applied in the first 1.5 days. So, out of that, we have now just shortlisted around 40 people. So, again, we have to do further round of shortlisting and we'll be announcing it soon. So one more thing is I would ask you not to place stop loss orders pre-market. So I will tell you what exactly will end up happening. Place it at 916. So there are chances that you will get at a much attractive price or much lower price than what you got at 915 pre-market. So I will tell you what happens. At exactly 9:15:01, there will be no much of liquidity. If you send your order at 9:15:01, whatever price it might be, it will get cleared. So let's say an option actually would have opened at 250 rupees, but you had placed the order at 300 rupees. So yours is the only option available. So so we have come up with something really exciting. So I'm pretty sure everyone here would be definitely interested in that. So let me just see, there is something up with the laptop. So this volume screen doesn't go to seem to go away. So is the audio audible, guys? Are you able to hear? Can okay because this right over here doesn't seem to go at all. I don't know what is wrong with it. So it seems to be stuck right over there. Yeah, so for the students itself, especially, So we have some exciting announcement tomorrow. So we have an internship program coming up, and it is one of a kind internship program which you wouldn't have seen anywhere else. So we know like how lucky we were to get the initial capital what we had, and we also know how hard it is to get the same capital right now. So that's the reason we have a special internship program for all the students. Since they will have lesser capital, two, they won't have lot of experience. That's the reason the mentorship, it will be quite hard for them to get in because of these criteria. So for the same reason, we have a special internship program which I'll be announcing tomorrow. Sorry guys, I had got a call. So yeah, any questions you guys have, you can definitely ask in the section. So I'll be addressing that again. This terminal you can just download from FIRSTOCK website itself. If you just go to firsttalk.com here. So you can directly go to download apps, and you can download this exe app. So they have the new exe coming maybe tomorrow or day after tomorrow, where the exe itself has the payoff graph and everything else. So once that comes out, it is going to be quite easy for us to trade. So even I'm looking forward to that, and tomorrow they will be releasing the same exe app. One a week might be little hard, but we'll try to do at least one a month. So one a month should be a good, I guess. So someday we'll just pick in a month, and we'll be doing one live trade every month. Yeah, FIRSTOCK does offer API. So they have completely free API, so you can automate your own trades using that. So we personally also use FIRSTOCK APIs. So even you can quite easily get it online itself. Yeah, FIRSTOCK charts are not really great, but I will tell you a few things why exactly we use FIRSTOCK. One for the ease of execution with this platform. Two, one more thing, if you have observed, is you can just punch in any quantity of order. If I put 10,000 also, the order will automatically get sliced and the order will go. So that is the second advantage. And three, I can go any out of money I want. Like no matter which out of money options we are talking about, we will be able to trade in that. Say you want to trade with 21,000, you will still be able to trade with 21,000 options. So this so 21,000 options is actually trading at 0.8, and market is at 17,000. So just took a look at it and looks quite attractive, to be honest. So never really expected 21,000 to have so much premium. So let's see about 19,500. So this has 1 rupee. So it's quite crazy how there is only like 3-4 days to expiry, and these options are trading at such high premiums. So in case if the overnight margins aren't used, we can quite easily sort out our brokerage. Maybe you can just end up shorting around 10,000 quantity of this overnight, and you will be getting around 1 lakh rupees, sorry, 10,000 rupees anyway. So triple straddle is nothing but again more or less like a strangle along with a straddle. So it is not like superior over any normal strangle. So you can rather consider doing a simple short strangle. These trades are not carried overnight. So this is the intraday trade. I'll be closing it today itself. But we are carrying some trades overnight. One is the ratio spread, which I just took some time back in the live trade itself. So maybe you can just go back a little and take a look at it. So we took one ratio spread for April, and we also have few more ratio spreads for March. So this is the March ratio spread what we have, and we have taken one more ratio spread for April as well. So this is the April ratio spread. So this is currently under loss, but there is nothing to worry about this. So we still have a lot of room. So before we go to a loss, so 32,000 is our break even. So we still have 10% left before we actually go into a huge loss. If the option goes in the money, I don't think there's anything much to worry. So meanwhile, guys, I had also shorted a Kotak Bank. I think even that is in loss. So I had shorted this April month 1600 puts at 31 rupees because I felt it was attractive at those levels. In case if market actually ends up coming to this level, I will end up taking the delivery. So market is falling, and maybe adjusting the position didn't turn out to be that great. So this always ends up happening if you have observed that. So today morning also we had discussed about the same thing. Let me just see, there is some issue with the laptop. Yeah, now seems to be fine. So we had discussed earlier as well. So you can see such bounces which are actually going to take you for a toss. So this bounce is where you actually ended up adjusting, but immediately you saw that it was a false bounce and the market immediately started falling. So here we adjusted, and this adjustment would have given us small loss now. So we'll go back and see how much are we losing from this adjustment. So we have lost around 14,000, 15,000 bucks from the adjustment what we have made. But it's quite okay because it would have saved us otherwise. So the moment the market breaks 80, so like right now it's at 97. The moment it breaks 80, 85, I'll square off the adjusted leg. So that is what we had discussed earlier as well. So the moment it breaks this level, we'll square off the adjusted leg. So even though we give it at a small loss, it's fine because it would have saved us in case if it was going against us. So for the other half of the quantity, the stop loss is going to be the same stop loss what you have initially kept. So you're not going to change any stop losses. 37,000 C short. So let's just take a look. So I feel that is supposed to be fine, given the fact that there is more number of call writing, I suppose, compared to puts. We'll just take a look at it. So you can see that there has been very strong call writing happening in Nifty as well as Bank Nifty. So this is just 36,000, and here itself you see quite a strong call writing happening. So 37,000 should be good to go. So today, since all of you are okay, Nifty has bounced back suddenly. So you can see these things keep happening every now and then, and that's the reason it has become quite hard to trade, because if you adjust, it is going to be a problem. If you don't adjust, it is going to be a problem. So today, since everybody is online, so we are going to take a very simple trade of a bear call spread. So let's just look at the market. So we'll just come back to Nifty and see the open interest. Okay, I'm going to take a simple bear call spread with 17,500. So let me just show you the trade now. So the trade is going short on 17,500 calls. I'll go around 7,000 quantity. So this I'll be purchasing. Okay, I will have to go with 6 or 5,000, 6,000 quantity or 5,000. So I'll go with 6,000 quantity. So I have done a very simple bear call spread. So I'll just put this on and show. So this is the position what we are going to carry. So I'll just show this. That is 15,000. So you can see this is a very simple position what we are going to carry, and we are going to get 50,000 rupees if market stays below 17,500. So let's just look at it. So this is a very simple trade, and it is very simple for me to adjust as well. So let me show you why. So my max loss here, irrespective of where the market goes, is going to be 1.2 lakh. So I have gone 6,000 quantity, sorry. That is going to be around 100, 200, 300. Right. So my max loss in the worst case is going to be 2.4 lakh. And as the market starts moving towards 17,500, it becomes very easy for me to adjust this trade. So that's the reason. Right now, I believe market might not cross 17,500, and that's the reason I have taken this very simple spread where I will end up making around 50,000 if the market stays where it is. So right now this spread is giving me a loss. So again, there's no need to monitor this as long as the market is below 17,400. Once the market comes above 17,400, we'll start to consider that. Now we'll go back to our intraday trade. So where we are right now making around 62,000 rupees. So we might end in the range of 70,000 rupees if the market actually ends up coming down 70 to 80. If the market ends up going higher, then we will have to see what exactly to be done. Maybe we'll end with 30-40,000. So what adjustments are we going to do? The adjustments are going to be pretty simple. So you can just convert this whole thing into a simple short straddle, and your loss is going to dip like crazy. So it is just going to come back to 25,000, but your break even is going to reduce quite a lot. So you're going to have very small break even, but your max loss is just going to come down to 25,000. So that is a simple adjustment what you can consider. So this is the intraday trade what we are holding, and then this is the the bear call spread what we have taken. So apart from this, we have a future short. So I'll just show this. We have lost 20,000 from the, we have a future long, only 200 quantity. We have lost around 20,000. So apart from this, we have another cash margin trade. So these two trades are taken mainly for cash margin. So this M2M doesn't change. It remains the same no matter which day. So then after this, in Bank Nifty, we have a couple of more trades. So let's come to Bank Nifty. So in Bank Nifty, the trades what we have is one is a ratio spread for this particular week. Then we have one more ratio spread for next month. So this next month ratio spread is in a loss because the market has started to fall. So these are the only trades what we are holding as of now. So we should wait for some more time to see how exactly things go. So right now we'll have our focus on this trade. So we'll try to exit today's trade in a profit, and rest other trades will take care on their own. So we don't have to give them a lot of attention. Uh, I didn't get this question regarding the cash margin trade, so I didn't understand what exactly that meant. And regarding where we stay in Bangalore, we right now have our office in Jainagar, third block, so near the South End Circle. So that's where our office is right now. the market is bouncing right now, and it is not a great thing for us, because if the market comes up, then we are going to lose money. So one thing what we can do is, the simple strategy here is just to not do anything. So in because it's well beyond time for us to sit and adjust. In case if it's moving up higher and we are not able to make money, is just to exit. So that is the most simple strategy what we can do. I'm not sure if they provide Greeks in API, but I'm sure they provide Greeks in their trading platform. The new trading platform also comes with a Greek as well as a payoff graph. So I'm not sure if they have in API. Oh, those cache trades. Okay, okay. I'll just explain regarding those. So yeah, we can definitely catch up sometime. You can definitely come to the office maybe next week or so. So those cash trades are mainly, the thing is, what happens is, let's say I want to end up buying. Okay, so what I will tell you what exactly ended up happening. So we when the markets fell, so we ended up purchasing a lot of equity shares. So for equity, to purchase the equity shares, now you need cash margin. You can't have your collateral margin to purchase equity shares. So now how do you get your cash margin? We didn't have a lot of cash with us back then. So the simplest way to get your cash margin is to actually end up shorting in the money, and tomorrow in your ledger you will get your cash credits in your ledger. So this you can end up using to purchase your equity shares. So our office comes right next to NMKRV college, in the next road to NMKRV college. Yes, you can give Nifty piece also as a collateral. So this is why we ended up shorting some in the money to get some cash, and yeah, that's how right now we are here where we are. So that day we got some cash by shorting. So now we have to recover these profits from option trading. So that is around whatever we have collected in excess cash, that we have to make in option trading, so that till then we have to keep doing this rolling over of in the money option short, so that we get to keep the cash. Otherwise there will be short margin penalty and so on. Okay, I guess the market is bouncing back, and our M2M is also dipping quite nicely. So from all the way to 80,000, we have just come to 30,000. So you guys can just Google Optionables. So we have updated the address as well. So like it comes right next to South End, like South End Metro Station, between South End Metro and NMKRV College. So that's where it is. So we had a profit of 80K, which is definitely true. But the issue is, you don't know if 80K is where exactly it is going to go post that. So it's okay. So even if we lose today, it's okay. Some other day you might end up making. So I would also like to thank Parth Kumar sir for super chat. Thank you for supporting us. I really appreciate it. The speech was quite a small one, so I thought, okay, it is not something worth posting because I just spoke for around 7-8 minutes, so quite a small one. Okay, so the market is slowly going up, and that means we are slowly losing out on M2M. Hopefully, we don't end up in loss today. So I'll book the like whatever the position is in maybe around 7 to 8 minutes, around 3:23, and we'll call it a day. If the market ends up gaining now, so there is no way we are going to come to profits because there is 7,500 quantity of call option short. So there is no way that is going to the so we have another 4,500 quantity other side, but that is not going to be sufficient to stop the carnage caused by these options. So we are definitely going to end the day with a loss. So right now it's shooting up quite a lot. The entire market is shooting up. So you can see we have more or less. So this adjustment trade actually kind of saved us money because you can see this adjustment trade has saved us somewhere close to 18,000 bucks. Okay, I guess now the move is pretty strong, and I don't know if we will be able to end the day with profit or not. So here, as we can see right over here, so the move is pretty strong. So if this is taken out, again we might have to go for a small loss. I am not exiting the positions for the reason being uh, UV will have to sometimes stick to the system. So I know it is not going in the favor, but I have anyways saved around 25,000 rupees. So technically I should have been in a loss of 25,000 rupees, but that has been saved right over here just by shorting this additional put option. I'll be exiting in some time now, around 5 minutes max, and let's see how much we end with. So hopefully we will be able to end today with positive. That's the only wish I have. Okay, so the market again has started to go up. So right now it's at 160. So actually, most of our profit has been earned through this adjusted leg, if you actually look at it in one way, because this leg has completely. Uh, so you can see that like I was expecting a bounce up to 17,200 from the morning, so didn't expect that it will be coming so much towards the end. So that was something which I didn't expect. So especially after that huge down move what we saw. It's an absolute flat day, guys. There is absolutely no profit, no loss, and it's quite disappointing because at least when we come live, if there's a loss or a profit, it would be interesting to see. So it's so flat that you neither have a profit nor have a loss, or maybe you will end up with a very very small loss. It's amazing to see how Bank Nifty has actually turned positive. So sometime back, we were just okay. Maybe I will just since we came to 323, I will also just exit the position because from here there is nothing much to gain, but there is more to lose as the market starts moving up higher. So this leg has nothing to lose, and this leg has something to lose, but it's only 2000 quantity. So, but this leg has a lot to gain. So it's 7500. So by 323, I'll just exit all the position, and today we'll call it a day. So we booked everything. So unfortunately for us, a good day turned out to be a loss-making day, but that's okay. That is going to be a part and parcel. So I'll tell you what is the positive thing today. So today, if you hadn't adjusted the position, so you can see this particular leg. If you hadn't adjusted the position, so this leg would have given you. Without this leg, you would have overall lost around 65,000. So because you had this leg entry, you ended up saving quite a lot, which is a pretty positive thing, obviously. So, apart from this, yeah, we'll also take a look at what is happening to all other trades as well. So, I'll just add everything. So, overall, with all other trades, also, we are at a net loss of 12,000 rupees. So, again, more or less, it's a no profit, no loss day. So, but I hope that even though the live trading was not so exciting, I hope that you guys had a great time joining the live session, and you also got to learn something. So that was anyways the main aim of this session. So like everybody in the team trades, so it's not just me. Everybody in the team trades, and we also do some like some other accounts which we manage, so they trade in that. So guys, with this we also come to the end of the stream, and I also hope that you guys had a great session. Sorry we couldn't make it big on both the sides, neither on the profit side or the loss side. So it's a quite a pale day to end the day with no profit or no loss. Or today we have a loss of around 20,000. So let's see how exactly it goes on Monday. Anyways, we'll be giving you live updates regarding this on our YouTube channel. So we'll see what happened Monday. And as I already mentioned, tomorrow we have a exciting announcement coming up, and also we are going to yeah, there's an exciting announcement coming up. Along with that, we'll be also announcing the mentorship. Who exactly have made it to the mentorship? So all that will be done tomorrow in the video. So I hope all of you had a great time. So I'll be closing the stream now. So hope you had a good time. Thank you so much for joining, guys.